A volatile session of trade on the last trading day of this week. Benchmarks end lower for the third day in a row. Nifty IT holds strong after TCS Q3 results, while other sectors decline in trade today. While most sectoral indices decline, Nifty Media Index falls the most. This was followed by a sharp cut of over 2% each on PSU Banks and Nifty Pharma. Speaking of broader markets, they underperform benchmark indices. The mid-cap index falls 2%, dragged by Tata Elxsi and IREDA. The small-cap index sees similar losses with Balaji Mines, Aegis Logistics, Techno Electric falling the most. Another record low level for the Indian rupee hovers near fresh lows of 86 per dollar mark for the second straight day. The pressure comes amid foreign capital outflows and oil prices edging higher and globally resurgent dollar. TCS stock price jumps over 5% despite muted Q3 numbers. The strong commentary fuels confidence in investors. Deal wins rise both quarter-on-quarter and on annual basis. The improving sentiment in discretionary spends is one of the key highlights of the quarter. Brokerages come out with mixed views on TCS results in the stock. It believes that the results tick all the boxes despite benign expectations. Nomura, on the other hand, retains a neutral stance on TCS, and Jefferies hails the management commentary on discretionary spend. HSBC maintains a hold stance, saying it is a lot more optimistic about TCS's FY26 outlook. There has been some relief for gas companies like IGL, MGL and Adani Total Gas. After a tricky period, they have gotten an almost full reversal of domestic gas delocation, which eliminates the risk on margins that it has been witnessing. Remember, the street is expecting weak Q3 earnings for IGL and MGL. Tata Elxsi stock is under pressure after reporting a subdued set of earnings for Q3. The company's verticals, transportation, media and communications and healthcare show muted improvement. The system integrated business sees delay in large projects. Adani Wilmar shares fall after the founder announces stake sale. This will be done via offer for sale. The OFS will open for non-retail investors on Jan 10th and retail investors can buy on Jan 13th. Remember, the rationale behind the stake sale was full exit of Adani Enterprises from the joint venture. Wilmar has now increased the stake to 75%. Macquarie initiates coverage on railway ticketing company IRCTC. It sees strong growth potential and gives an outperform rating on the stock. Macquarie is bullish on the company's monopoly of a direct market share of 80% in the rail e-ticketing. IRCTC earns the license and commission fees from catering services as well. Macquarie expects modernization benefits to aid the revenue. It hails margin growth of company and a healthy cash flow of the company. CDMO players in focus. Jefferies maintains a buy on Piramal Pharma with a target price of 310. The brokerage firm maintains hold on Syngene. Gland Pharma gets downgraded to underperform with a target price of 1630 rupees. Despite mixed earnings, the CDMO stocks deliver stellar returns in CY24. Jefferies believes that this year is going to be a good year for the sector. Josh Engineering gains after delivering the business update. The company's consolidated December orders are at 80 crore rupees and the total consolidated order book now jumps to 924 crore rupees. Bernstein comes out with a note on the quick service restaurant space. If 2024 was a tough year for the segment, Bernstein thinks 2025 will be a turnaround year. Factors like quick delivery, better network, development and growth of regional brands will aid the space. Bernstein retains outperform for Jubilant and Devyani International, whereas it retains underperform stance for Westlife. Syrma SGS, a mid-cap stock in the electronic equipment industry, ends under pressure today. This was after the company is packed with MSI to manufacture laptops for Indian market. The stock has been on a downward trend and underperforming its sector. GMM Pfaudler gains after brokerage firm Ambit Capital initiates a buy on the company. Ambit is positive on company's global leadership in niche glass-linked process. The company has a track record of sales up and margin turnaround of their target. Ambit Capital believes that these factors fare well for the company. Indus Tower stock ends under pressure. Vodafone promoters and Vodafone PLC utilized proceeds worth 1910 crore rupees, and the promoters complete placing of remaining 3% stake in Indus Towers. Multi-bagger PSU stock IREDA sees profit booking after the Q3 earnings. The company's asset quality has been on a better sequential basis. The outstanding loan book rises 36% to 68,000 crore rupees. GTPL Hathway stock crashes over 9% after the Q3 profit plunges over 61%. Despite this, the company saw subscriber growth in both the cable TV and broadband segments, indicating a potential for recovery. IndusInd Bank ends the day with cuts. This after Goldman Sachs downgrades the lender to a neutral rating. It cuts the bank's earnings per share estimates over a variety of factors. The company's revenue engines slow down over the last 2 quarters, and Goldman thinks that rising delinquencies will hit the bank's commercial retail portfolio. Goldman believes that a slower loan growth will impact the bank's profit. The 40-year-old Terminal 2 of Delhi Airport to soon close temporarily for 4 to 6 months. The GMR-led airport will refurbish Terminal 2 after DGCA review. This will include capacity expansion and modernization to meet the rising demand. The renovation is expected to begin in April and conclude in September. After the inaccurate gold import data raises alarms, the government sets up a special panel to tighten mechanism. Commerce Ministry says that double counting was noticed due to migration of data transmission from SEZ to Indian Customs Electronic Gateway. Trade figures from April 2024 to November 2024 have been revised. Supreme Court stays GST show cause notices on online gaming companies. The amount of these show cause notices sums up to 1.5 lakh crore rupees. The stay is applicable to all show cause notices until the final resolution is reached, and the tax department insists 28% GST on these companies. Final hearing is scheduled on March 18th. On the current alcohol business dispute in Telangana, Vinod Giri of Breweries Association of India speaks to NDTV Profit. He says Telangana government must consider the appeal given there has been no price revision since 2018-19. He is unaware of what is the exact situation around the product availability, but he is optimistic about employing some quick solutions. He also says that all the stakeholders recognize the need to relook at the prices. According to a recent report by United Nations, the near-term economic outlook for South Asia remains promising. The region is projected to grow at a robust pace of 5.7% in 2025 and 6% in 2026. India is expected to lead the growth trajectory. The economy is likely to expand by 6.6% in 2025, supported by strong private consumption and investment growth. Bengaluru emerges as the best city for women workers in 2024. According to a survey, it surpasses Chennai and Mumbai that rank 2nd and 3rd respectively. Delhi pops at the 8th spot in the list, and South India shows the highest level of gender inclusivity. Restaurant body NRAI is in full mood to take legal action against Zomato and Swiggy. The body complains of monopolizing food delivery market. This comes after 2 platforms launched their 10-minute food delivery apps. NRAI alleges anti-competitive practices. US Fed officials confirm that the central bank will likely hold interest rates at current levels. The pause on interest rates will be for an extended period. The rates will be cut again only when inflation looks meaningfully better. Remember, Fed's favored inflation gauge rose 2.4% this year through November. The inflation gauge jumped to 2.8% minus food and energy, each above the central bank's 2% target. In a rare exclusive interaction with NDTV Profit, Dixon Tech's Executive Vice Chairman Sunil Wachani talks about how he is optimistic for India for the next 25 years. The company is optimistic about the potential PLI 2.0 rollout. He highlights how India is prepared to export $100 billion worth of electronic products. Narsimhan Ishwar, President of Consumer Electronics and Manufacturers Association, speaks to NDTV Profit on budget expectations. He seeks extension under goods import at concessional rate scheme. He says that industry looks forward to PLI in electronic components. He also urges the government to support the industry with adequate initiatives to localize operations. On our brand new show, The Disruptors, released this week, we caught up with Nitin Kamath, CEO of Zerodha. He talks about being one of the disruptors in the stock broking segment. So do keep an eye at it for it. IT and healthcare sectors are two promising sectors in the current market scenario. This is the word coming in from Vineet Sambre of DSP Investment Managers. He even talks about building materials, chemicals, metal space and expects them to do well in this as cycles change. In a regular update, distressed airline SpiceJet to unground 10 aircraft by mid-April 2025, and the airline plans to distress aircraft includes 4 737 MAXs as well. Great news for budding investors. SIPs to soon start at just rupees 250. SEBI Chief Madhvi Puri Buch shares an update on the proposed small SIP of 250 rupees, speaking about it when investors can access the option to invest in mutual funds with a small SIP of rupees 250. Buch states that it would be launched soon without specifying a particular month or date. Now on to an NDTV Profit exclusive. Niti Aayog bats for modernizing regulations to boost efficiency. CA Anant Nageshwaran had earlier indicated the deregulation is going to be a big focus on economic survey. After weeks of panic over bomb threats, Delhi police identifies culprit as a class 12th boy, now detained as he sent multiple threatening emails to various schools. He sent the threats hoping that they would delay the exams. Despite a seemingly innocent motive, it has caused a lot of disruptions and wasted a lot of time of the officials, with former CM Arvind Kejriwal saying that Delhi has never seen such a bad state of law and order. CM Yogi launches new radio channel Kumbhavani as people can have access to the festival from afar. The Prasar Bharati channel features live updates about events throughout the day, even reaching places with connectivity issues. The CM says that festival does not discriminate and unites people of every caste, community through shared devotion. New Delhi chokes again in a severe AQI dense fog as dense fog engulfs the city. In light of the foggy conditions, the Delhi airport issues advisory on disrupted flight services. Additionally, in Uttar Pradesh, several vehicles collide due to dense fog on the Delhi-Lucknow highway. In Chhattisgarh, relief and rescue works continue at a smelting plant in Mungeli district. A silo collapse kills labor, trapping several others yesterday. The Supreme Court prohibits the BMC from any further tree felling in Mumbai's RA colony without their permission. The order comes after Mumbai Metro cuts down more trees than was agreed upon. To prevent project from reaching a standstill, the next hearing will take place on March 5. President-elect Donald Trump can be sentenced today, days before his swearing-in. Trump was convicted in May for making a hush money payment to adult film star. Trump responded to the SC's decision, posting his innocence to his social media platform Truth Social. He plans on appealing the case, claiming that it is political warfare. The Los Angeles fire doubles as the death toll rises to 10. 9,000 homes have been destroyed and the National Guard has been called to help manage the crisis. However, LA is still not completely out of danger, with firefighters struggling as water hydrants run dry. In an update on the Lebanon elections, Army Chief Joseph Aoun has been elected as the president after 2 years of vacancy. He vows to take back complete military control from Hezbollah, weakening their position. He also plans on rebuilding the country and pulling it out of the political and economic disorder. Getting support from France, US, Saudi, and many are calling this as the era of Lebanon's cooperation with the international community. Social media platform TikTok will appear before the US Supreme Court today, the final bid to overturn a ban, raising concerns about national security and political manipulation. A law passed last year that requires TikTok to be split from the Chinese owner by January 19th. If the litigation is implemented, it would not completely ban app but would require the tech giants to stop offering updates, killing it over time. TikTok believes that it has been unfairly targeted and is challenging the ban with users' right to free speech. 2024 is the hottest year ever. This is after several weather monitoring agencies announced today. As per weather departments, the planet has temporarily passed a major climate threshold. Last year's global average temperature passes 2023's record heat and keep pushing even higher. It surpasses the long-term warming limit of 1.5 degrees Celsius since the late 1800s. Former India and KKR batter Manoj Tiwari criticizes Gautam Gambhir, the current head coach of Indian cricket team. Tiwari and Gambhir were the teammates in IPL and for the Delhi state team. Gambhir is under the fire for poor team performance in recent tests against Australia and New Zealand. Tiwari called him a hypocrite for not practicing what he preaches. The fresh work-life balance controversy sparks widespread debate. Former badminton player Jwala Gutta criticized L&T's chairman on X.com, describing his remarks as misogynistic. She expressed disappointment and concern over the situation, questioning why someone should only spend time with their spouse on a Sunday. Gutta pointed that it is troubling to see highly educated leaders of major organizations disregarding the importance of mental health and rest. She found such statements disappointing and alarming, highlighting a lack of awareness about these crucial issues. Ravichandran Ashwin sparks another controversy, says Hindi is not our national language but official language. He was attending a graduation ceremony of a private engineering college in Tamil Nadu, where the use of Hindi has always been a sensitive subject that has fueled strong reactions. PM Modi makes his podcast debut on Nikhil Kamat's People by WTH, with their discussion involved various topics like global conflicts, politics and entrepreneurship. Conversing with the host Nikhil, the PM also reflected on past moments throughout his career, talking about his mistakes and successes. And that's a wrap on Market Express today. There's lots more left on NDTV Profit, so stay tuned and stay updated.
The world of capital markets and trading post-Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first 2 months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The world of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first 2 months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need.
Sensex Nifty end week with 2% cuts. More sectoral indices decline led by Nifty Media, PSU banks and realty drag as well. IT remains the only sector which is unscathed, but bucks trend and ends nearly 4% higher amid third quarter earnings. Dixon Tech's Executive Vice President Sunil Vachani clarifies that current lag on subsidies due under PLI 1.0 is more of a technical issue and that India is prepared to export $100 billion worth of electronic products. In a move towards better financial inclusion amongst masses, SEBI Chief Madhvi Puri Buch says small SIPs of just 250 rupees will be launched soon. Commerce industry addresses unusual surge of November gold imports, clarify that silver and electronics data have also been revised. But why did this mishap in calculation occur? NDTV Profit breaks it down for you. Delhi Airport's 40-year-old Terminal 2 will be closed for 4 to 6 months in the next financial year to get a revamp. The refurbishment works are expected to be completed in September. US Supreme Court clears the way for President-elect Donald Trump's sentencing in his hush money criminal case. This deals him a setback as he prepares to begin his second term in office. At least 10 dead and whole neighborhoods destroyed as distraught residents flee amid ongoing wildfires across Los Angeles. National Guard troops have also been deployed to the area. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, metal and PSU banks have dragged the benchmarks down while the IT sector was the only one which dazzled. This comes amid TCS Q3 results reigniting hopes. My colleague Harsh is joining us with a detailed report.
Well, we've capped a tough week with a tough day today, and the Nifty was under pressure. We're off the day's lows for sure, maybe 100 points from the day's lows, but that doesn't really give any relief. Let's look at the intraday chart and you'll know why. Because we did see a bit of a bounce back, a recovery towards the flat line, which just didn't sustain, after which we saw the Nifty giving way nearly 100 odd points lower and pretty much an even keel in terms of where it ended from the high and from the low, pretty much in the middle. But that's on the Nifty. Where did the pressure come from? Let's pull up the contributors, because the IT pack really stood out across the board. In fact, you're looking across even broader markets, IT was the real standout today, and large cap IT after TCS's numbers. But the heavyweights, as well as the breadth of the market, just pulled the market one way. And let's look at the breadth. The advanced decline, that's the metric here, and look at it. 1868 declines to just 304, advances 6:1. So the breadth sharply in favor of the declines. While the large cap index was in some form or shape insulated, but you're looking at mid cap with a cut of 2%, the small cap with a cut of 2.5%, closing near the day's lows. And you look at the week gone by as well. The Nifty 50 saw plenty of pressure throughout the week, and of course closed today 0.4%, but 2.5% lower for the week. But more pronounced was the mid cap and the small cap index. The mid cap index was down 5.5%, small cap index down 6.5% for the week gone by. Even among sectors, IT was possibly the only one which did decently well for itself given today's rally. 3.5% today, but you look at the week gone by, 1.7% higher, which is positive. But you look at some of the other ones, the Nifty Bank, for example, 1.5% lower today. We saw 4.5%-ish kind of a cut on the Nifty Bank for the week gone by. So real pressure coming through. The largest laggard was the Realty Index, 8.5%+ lower for the week. That's where some real pressure is building up. Sectors today outside of IT, pretty much all sectors under pressure. Realty was one of the top laggards today as well. You saw PSU Bank under pressure, 2.5%+. Last off, the BSE 500 top gainers, top losers. And this is what really fascinates me here. Just if I look at the gainers, look at the number of Nifty 50 IT stocks here, except Delta Corp, PNG Health. Pretty much all the others are large cap IT. So it's led entirely by large cap IT, and this is the BSE 500 gainers losers list. So that's what really stood out. Among losers, some PSUs under pressure, REC under pressure due to IRIDA's numbers, and GIC also saw an 8% cut. So some real pain there if you're looking at the broader end of the spectrum.
Right, Harsh. Now, earlier we also spoke with Vineet Sambre of DSP Investment Managers about why he believes the IT and healthcare sectors are two promising sectors in the current market scenario.
So at the moment, we are thinking about healthcare being one where the sustainability of earnings is going to be good, and the valuations are not, they have gone higher, but they're not very expensive in a way. IT sector, we saw TCS calling out that there are signs of recovery. The decision making is turning out faster. So I would imagine that as the US sort of comes back in terms of the momentum, the IT sector should also produce decent opportunities. The stocks, while they are not very cheap, but as the business momentum picks up, maybe we would find opportunities out there.
Viewers, in the wake of TCS Q3 earnings, my colleague Sajid spoke to CEO and MD K. Krithivasan, and here's what he had to say about the quarter gone by.
In the early part of the quarter, we continue to see the prioritization of the programs. But as we went through, we realized a much better deal bookings, and also the quality of the deal bookings. And also we started seeing some discretionary projects, some revival of the discretionary projects. All these things put together, most importantly, very strong TCV, particularly in BFSI, in North America, in retail, which are the important verticals for us, important geography. All these things put together, and also some yearly conversations with our clients where we hear there could be a positive upward bias in the budget for next year. They're not frozen it, still discussion, but there is a positive upward bias in budget is what we are hearing. All these things put together gives us a comfort that CY25 can be better than CY24.
India's November industrial output grows at 5.2%, the highest in 6 months, while manufacturing grows at 5.8%. Pallavi is here with the key takeaways. Pallavi, over to you.
Yeah. Right, the IIP figures have come in as a positive surprise. They've come in at 5.2%. This is for the month of November, and this is compared to 3.7% that we had seen in October. Now, IIP growth is actually led by manufacturing this time around, which has been fairly tepid in recent months. Manufacturing grew by 5.8% for the month of November. This was compared to about 4.4% growth that we had seen in October. Mining continued to remain tepid, growing by about 1.9%, while electricity generation grew by 4.4%. Now, if we look at the use-based classification in IIP, there again quite a few positive signals that we can see in the November print. Now, capital goods grew by 9%, while infrastructure or construction goods grew at 10% in November. Consumer durables also showed strong growth at 13.1%. Consumer non-durables was flat, growing by just about 0.5%, while primary goods growth was at 2.7%. So all in all, this figure was definitely above what was being expected, possibly because of the festive and wedding season demand which we had seen across several high-frequency indicators in that quarter. What we're going to have to watch out for is whether this growth continues in the coming months.
Right, Pallavi, thanks for taking us through those numbers there. Now, moving on, India is prepared to export $100 billion worth of electronic products. This is what Dixon Tech's Sunil Vachani has highlighted in an exclusive interaction. Vachani is also optimistic on India and its growth for the next 25 years. Listen into a slice of that conversation.
I think if you look at the from the industry's point of view and the country's point of view, there is no doubt that we are sitting on a very large opportunity in the country and in the industry. And the opportunity now is to make India the next hub for manufacturing electronics, appliances, and then mobile phones, not only for the domestic market, but for the world. This is also a time when a lot of countries, a lot of buyers are looking at an alternative to our neighbor. And if I can say, the next 25 years belong to India. This is India's time. This is our time. I would also like to add that I think if we look at the Make in India program, it's been a huge success. Almost 15 years back, our Honorable Prime Minister gave a call that we need to make India the next hub and we need to focus on Make in India. And I think in the last few years, we have seen that there has been a tremendous growth in the manufacturing of ICT products. There was a time when we were importing almost 90% of the mobile phones sold in India. And today, we are not only producing for the domestic market, but we are producing for the world. We are also looking at a very ambitious target for exports of electronic products of almost $100 billion and also fulfilling our Honorable Prime Minister's vision of a production of almost $500 billion in the country, including exports. Now, after the success of the PLI that was introduced for mobile phones and the PLI that has been introduced for various sectors, we now need to ensure that this success that we have achieved in the last few years is sustainable. And the way that it can happen is by now investing in design and now investing in backward integration and investing in creating a very strong and vibrant component ecosystem.
Now on to an update from the gaming industry. Supreme Court has now stayed proceedings with respect to all show cause notices until final disposal of case. Shares of Delta Corp also reacted to this news. Let's take a look at this report by my colleague Varun Gakhar.
So the top court has stayed the proceedings with respect to all the show cause notices in the retrospective online gaming taxation issue. Now this comes after these companies had sought a stay on these proceedings, fearing a coercive action from the tax department. They had said that a stay would make them assured of the fact that no demands are made from them until and unless the top court finally hears and decides the matter once and for all. Now this comes as a win-win for both the tax department and these online gaming companies, as even the department was fearful of the fact that if a stay is not granted on these show cause proceedings, then some of these proceedings may go time barred and thereafter a recovery proceeding may not be possible. Now, since a huge demand of rupees 1.5 lakh crore was pegged on this issue, the top court has agreed to stay the proceedings in the case with respect to the show cause notices and will now take up the case for a final hearing on the 18th of March.
At SEBI and NISM Samvad event, capital market regulator SEBI Chief Madhvi Puri Butch shares an update on the proposed small SIP of 250 rupees. Speaking about when investors can access the option to invest in mutual funds with a small SIP of just 250 rupees, Butch states that it will be launched soon without specifying a particular month or date.
As we move along this path, just as capital formation is important for the economy and its growth, equally the flip side of the investor, we want that financial inclusion to reach, and which is why the 250 rupee SIP is so important to us, which is due to be launched very shortly. And we want that tomorrow these young girls who are there studying and looking forward to a future, we hope that their parents will be able to participate in the wealth creation of the nation through the 250 rupee SIP.
US Delhi Airport's 40-year-old Terminal 2 will be closed for 4 to 6 months in the next financial year to get a revamp. Sesha joins in with more on this. Sesha, what's happening on this front?
The Terminal 2 of Delhi Airport, which was built way back in 1986, is set for a major overhaul, and for that the terminal will be shut for about 4 to 6 months between April and September this year. Now currently T2 is used only for domestic flights, and the revamping exercise will include upgrading and expanding the existing infrastructure to meet the anticipated surge in passenger traffic. The refurbished T2 will also have new passenger boarding bridges and aero bridges, which will have autonomous docking technology, the first of its kind in India. It will also have modern ceilings and skylight designs for a more appealing environment, besides advanced flooring and better road connectivity for passengers' convenience. T2 is being renovated after aviation safety regulator DGCA had flagged the need for it last year. Now currently the repair and restoration work for T1, a part of which collapsed last year in June, is ongoing, and it is expected to be completed this summer. Now, the temporary closure of T2 is likely to cause minimal disruption, as the newly developed T1 will absorb the additional load.
Right, Sasha. Now, the commerce industry has addressed the unusual surge of November gold imports. The officials have clarified that along with gold, silver and electronics data have also been revised. Why did this mishap in calculation occur? My colleague Rishabh joins in with a detailed report.
Commerce industry has finally addressed the sort of unusual surge in the number of November gold imports as well as other imports, and they finally addressed why such a mishap happened. What they said was that this is due to a data transmission mechanism that was under migration for most of last year, and that is why it was due to double counting between these two portals that the government takes this export-import data from. What they also mentioned was that this data transmission mechanism migration is still not complete, and that is why revisions have been made to trade data starting April last year to November last year. So a sizable period there that has seen downward revisions in terms of the trade data coming in. And it's not just gold that has been revised sharply. It is also silver and as well as electronics data, trade data that has been revised sharply downwards. What they also mentioned was that a panel now has been formed to look into this matter and to ensure that to ensure that consistent data is published going forward. Now, this panel will have members from the DGCIS, which is the sort of the investigative arm of the Commerce Ministry, as well as CBIC, which is part of the Finance Ministry, and from the special economic zones where all this export-import data comes in from. So a special panel has been set, and they will now review the process in terms of which this data reporting happens so that erroneous figures are not repeated in the future.
Thanks, Risha, for that. Now, Quant Group founder Sandeep Tandon has requested a settlement with market regulator SEBI in a front-running case. My colleague Charu Singh has the details. Charu, tell us more about this latest offer by Sandeep Tandon.
So, the Quant Group founder Sandeep Tandon has approached the market regulator, Securities and Exchange Board of India, to settle the allegations that he was facing in the Quantum Mutual Fund front-running case. Now, the allegations include front-running, market abuse and insider trading involving Tandon and other entities as well. As per the sources that spoke to NDTV Profit, some other entities might also be coming in the case to the market regulator for settlement. It should also be noted that SEBI had raided several locations in relation to this case in Mumbai as well as Hyderabad in June last year. Apart from this, it is very interesting to know that this is the second time that a development is taking place this year with regards to a front-running case, because recently we also saw a very hefty fine and a stringent order on Ketan Parekh and other 21 entities. So let's tune in and see what happens next and what is the quantum of this settlement and if it goes ahead at all.
Thanks for bringing us those details there. Now, the Hindu Business Line Agri and Commodity Summit is themed on shaping agriculture and agri-business in a changing climate. Industry leaders, policy makers have gathered to discuss the pressing concerns of the climate change. My colleague Varun joins in with further details.
That's right. So we're here at the Hindu Business Line Agri and Commodity Summit of 2025, which is taking place in Delhi with a key focus on the theme shaping agriculture and agribusiness in a changing climate. Now, climate change, as we all know, is one of the most pressing concerns in today's day, and it is in this backdrop that the summit has brought together various industry leaders, policymakers, experts, and all the other stakeholders to address the critical challenges posed by climate change while exploring possibilities and opportunities to build a resilient agricultural economy. Now, inaugurating the event, Devesh Chaturvedi, who is the Secretary of the Department of Agriculture and Farmers Welfare, highlighted the need for innovative solutions and collaborative efforts to safeguard the future of farming. The summit features multiple sessions delving into the impact of climate change on agriculture and agribusinesses and aims to foster actionable solutions for sustainable growth. Presented by NABARD, co-powered by the Federation of Seed Industry of India and in association with YARA, the summit promises to provide discussions on sustainable practices and evolving market dynamics in the agricultural economy. And the Hindu Business Line Agri and Commodity Summit is poised to shape a climate-resilient future for the Indian agriculture.
Thanks, Varun, for that. Now, wildfires in Los Angeles have killed at least 10 people. Forecasters warn higher winds, which might trigger more flames. Arson investigators are looking into the start of another fire, which has destroyed more than 5,300 structures. My colleague Vishnu joins with a detailed report.
Well, I'm in Altadena. This is one of the worst hit areas in the greater Los Angeles area. You can see fire trucks behind me, and they're actually trying to put out fires in this particular home. This entire area has been entirely burnt out. You can see the fire service people walking in over here, the firefighters working over here. We can't get in beyond this particular point, but they're working over here. You can see a great deal of damage in this particular area. The smoke is still coming out of some of the areas over here. And what we're going to actually do is walk through some of these areas to give you a sense of what it looks like. And everywhere that you see, there's devastation. So just follow me as we, Stephen, go to this area and just point out that, there's still smoke coming up. from these homes which were completely destroyed, as you can see over here. And there are any number of homes which have been entirely destroyed. So there is smoke, which you can see coming out of these structures. A lot of stuff burning, we can smell it. There is ash in the air as well. If we move across this road, and this seems to be an affluent part of this area. We can see cars which have been entirely burnt out, and home after home has been completely destroyed. These are the savings of people completely destroyed.
Viewers, that's all the time we had on this edition of Profit 360. But do not miss to catch the full conversation of a brand new show, The Disruptors, today at 6 p.m. and 9 p.m. Stay tuned to NDTV Profit.
The world of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The world of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
of capital markets and trading post-Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome. You're watching The Big Question. I'm Tamanna Inamdar, and the big question is one that everyone's talking about. Do you need to work longer, harder to breaking point to really be productive and successful? The latest trigger coming after comments by L&T Chairman S.N. Subramaniam endorsing not a 70 but a 90-hour work week. Social media and even offices have been hotly debating the issue. First, let's begin with what he said during an interaction with his employees.
This is on HR. Why is L&T still making employees work on Saturdays even after being one of the largest conglomerates and the face of India's business world?
I regret I'm not able to make you work on Sundays, to be honest. If I can make you work on Sundays, I'll be more happier. I work on Sundays also. What do you do sitting at home? How long can you stare at your wife? How long can the wife stare at your husband? Come on, get to the office and start working. You know, I was meeting with the Chinese recently, and the gentleman told me, we will beat America anytime. I said, why are you saying that? The Americans work 50 hours a week, we work 90 hours a week. I was a little stunned at his answer. So that's the answer for you. You've got to be on top of the world. You've got to make the fastest, biggest, longest, the largest, everything like that. You've got to work 90 hours a week. Get going, guys. Come on.
Well, no surprise that social media was then flooded with memes comparing Subramaniam to Infosys founder N.R. Narayan Murthy, who was pilloried online for advocating a 70-hour work week. Narayan Murthy continued to stick to his guns despite several celebrities saying that this is just not right. In fact, in the latest round, celebrities from Deepika Padukone to Jwala Gutta have slammed the L&T chairman. L&T later issued a press statement backing their chairman's statement but attempting to soften their blow. Their statement said their chairman meant that achieving extraordinary results requires extraordinary effort, particularly in a time when India is striving for progress. Many on social media dug out Subramaniam's salary details and said they would be willing to work 90 hours for that pay packet. But jokes apart, the big question now, is it fair to expect anyone to put in a 90-hour work week? Especially at a time when startup founders are suffering serious health issues. We've had 2 deaths of founders in their early 40s in the last month alone. Isn't stress the big killer? Should employers take better care of employees' health rather than overwork them? But I think most importantly, is there any kind of data or study which proves that working longer means you are more productive? We have a whole slew of speakers exclusively on the show. We're going to be speaking with Harsh Mariwala. You're going to be hearing from Sanjeev Bhikchandani. You're going to be hearing from Manish Sabarwal. But first, let me begin with a conversation with founder and chairman of Marico, Harsh Mariwala. Mr. Mariwala, thank you so much for speaking with us. I'm going to start this question a little differently. I'm going to ask you, is this a generational issue more than anything else? Because you have more and more older founders making these kind of statements.
I think separately, nothing connected with what has been spoken on this subject of hard work, but separately, if you look at the youngsters who join your organization at a young age, for them, work-life balance is a very critical component of their life. And I've been seeing this in the last few years. But it's irrespective of what has been said by the other industry leaders in terms of the need to put in a certain number of hours. So yes, it's to do with work-life balance, which is far more, it's like many other things. The new generation is passionate about purpose of the organization, sustainability initiatives, and also in terms of work-life balance. But maybe I think to the credit of some of the seniors, some of the youngsters have taken it too far, because if you are joining an organization, there is a certain expectation that sometimes, not always, that there will be some work which will be outside office hours. And I've seen that some of the youngsters, they refuse to take any calls or refuse to budge, and they want to work only on a certain fixated time. Of course, a lot depends on the kind of business one is in. For example, with businesses with project deadlines, one will have to stretch. But to do it on a perpetual basis is wrong. There will be short periods of bursts of higher activity when everybody will stretch, starting from the top to the bottom. And I think that is expected out of employees, and they can't say that work-life balance and I'm completely rigid about it. So depending on the context, depending on the kind of business one is in, one should be a little bit more flexible.
No, those are two extreme situations, Mr. Mariwala. So let me come to the hub of the debate that we're having right now. And the debate right now is about 70-hour work week or 90-hour work week, 90 hours being the latest thing. Why just work on Saturday, work on Sunday as well? How much will a husband look at their wife and a wife look at their husband? That was, the context of the whole conversation. And it's all being tied to nation building. That if India wants to be on top, then her people have to work so much. What do you make of that?
I don't agree with these statements because, first of all, at senior levels, one may have to stretch a little bit more. If you're running your own business or at a very senior leadership level, because to some extent, your financials also are tied up to this. If the company does well, you have ESOPs and, it has a huge kicker in terms of your own wealth. Now, that may not happen at lower levels because they don't have any ESOPs. So what is in it for them? If you expect them to work for 70 or 90 hours, why should they stretch themselves? They might as well take some other job, because is there a huge upside to them if they really start working hard? I think the biggest challenge is for all the professionals is to make talent realize that to behave like owners. And when you say behave like owners, they should empower talent. They should involve talent. And it should have some impact on their financials. They should give them freedom in terms of agility, risk-taking. But ultimately, I think I am of the opinion that lack of time is an effect. That means something is not happening rightly, because you don't have the right structure or you don't have the right talent, which prevents you from delegating down the line. So I think from short periods, I understand. I think one will have to stretch themselves depending on the type of what stage of business is in. But on a perpetual basis, to say it is 70 to 90 hours, I have my disagreement, especially at lower and middle levels.
So exactly that point, sir, you said that people should work like they have ownership.
Yes.
But people are working, and this is something that a startup founder has written. There are a lot of people are in jobs that they frankly don't like. They work because you have to make ends meet. You have to pay the bills. Why should they feel ownership, and why should they, at the end of the day, deal with all of the health hazards and put all of that in if they're not owners, they're employees?
So it will not happen, to say that people should work 70 or 90 hours and without many other changes in terms of making them feel important, giving them rewards for working hard. It will not happen. It's just a posturing which is not going to happen because ultimately in big cities, a lot of time gets wasted in commuting. So when you're talking of 10-hour working per day or 12 hours working per day, if you have 5 or 6 days working, plus you need to add 2 more hours, at least 2 more hours on average in terms of commuting. So that takes you 14 hours. Now, some amount of time goes into bathing and essentials, and some amount of time in terms of sleeping. So how much time would you get if you work 14 hours a day? How much time would you get with your own family? And ultimately it will be done at the cost of sleep, which is again not healthy. So you may stretch, but it can impact you very negatively because good sleep is very important in terms of leading a healthy life. So to me, this is not practical from a perpetual point of view. Short periods, and again, depending on the level, depending on the type of business one is in, one may stretch, which is okay for a short period, but on a perpetual basis, this does not make sense.
Yeah, so obviously 90 hours is not even feasible, it's not even doable. Maybe people who find joy in their work, own their companies for some time may put in that kind of work. But I want to come to the other side of it. And you started the conversation actually with that point, Mr. Mariwala, of how a lot of young people that you are seeing hiring are very, very clear about their work-life balance. It's above all else. There have been so many reports and commentary about Gen Z and the difficulty in hiring them as employees. Is that the other side of this coin?
I would think so, because to some extent the youngsters are going overboard on work-life balance. There are certain occupational hazards in terms of working and the type of business one is in. So if there are those issues, you can't just say that I will only work from 9 to 5 and nothing more. I don't think that's fair, because ultimately you are a part of an organization, and if you don't stretch yourself in those times of emergency or those times of deadline, then the organization gets impacted. So the younger generation also has to change their attitude in terms of being more flexible to work longer hours if need be.
In terms of long work hours and nation building, I want to get your view specifically on that. Because again and again, this gets pegged to nation building. If India wants to be number one, if India wants to beat everyone, then we need to work hard. Do you think long hours equals to hard work, equals to great output?
Yeah, I think first of all, you must realize that we have a huge unemployment problem. So even if, what are you going to do about it? There are so many people, if there is enough work, then why can't they get employed first rather than the existing people working longer and longer? I reckon that overall the quality of talent in terms of capability is there, and they're not able to get their jobs. So why not, why unnecessary push, especially people at lower ends to work hard and deprive some others who, if the workload has increased in terms of creating more jobs.
Just one last word from you, Mr. Mariwala, on the entire debate. And I want to know your view. If someone were to ask you in the middle of all of this, so how many hours a day do you work? Have you worked? Have you ever had a count?
Yeah, I don't have an operational role now, so I don't. And I don't have that kind of pressure.
But at the peak.
No, I have not worked. Depending on certain cases when there was some emergency, I would have worked, but otherwise, not. I have not worked beyond 10 hours on an average, 8 to 10 hours.
Yeah, and yet you've created a fantastic company, a solid business.
That's what I'm saying, exactly. There is something wrong. You can't say, I need to put in more time to succeed. Lack of time is an effect of not having the right organization structure, not having the right leadership style, not empowering people, not trusting people, not creating the right culture, where a lot of time gets wasted in organizational bureaucracy and gossiping, backbiting. If you create an organization which is devoid of all this, then people will just be working and not be doing anything else. Asking people to work today, people will be sitting in the office, but they'll be on their computer. How are you going to monitor who's going to do what? They can be on the desk and playing some game. Nobody will come to know also.
Yeah, it's the quality of work that matters. Thank you so much for your views on this. Okay, and we continue the conversation. Sanjeev Bhikchandani, founder and vice chairman of InfoEdge, is with us, and team leads is vice chairman Manish Sabarwal joining us now. Welcome to both of you, gentlemen, and thank you so much for joining in on, I think, what is the hottest debate. Mr. Bhikchandani, let me start by asking you why you think this has become such a hot debate. Why has it touched a nerve? Because everyone who's seeing it knows that you can't really work 90 hours, but it's touched a raw nerve somewhere, isn't it?
You know, he was giving a message that look, मेहनत करो, फल मिलेगा, मेहनत करना अच्छा है. Okay, now whether it's 90 hours, 80 hours, 70 hours, 60 hours, that's not the point. The point is you got to work hard if you want to get somewhere in life. I don't think we can argue about that. If you want to be this clock watcher who's saying, it's 9 to 5 only, 40 hours only, never mind if work gets left over, never mind if deadlines are not met, it doesn't matter. That probably will not work in a high-performance private sector organization if you are at the management level, because you've got to do what it takes and deliver. And then perhaps you can work in a different place.
That's so you are for this statement, Mr. Bhikchandani? When you heard it, what were your first thoughts?
No. When I heard it, I said, look, 90 hours a week, that's 12 and a half hours, 37 days a week. That's not sustainable. You can do it for a week, you can do it for 2 weeks if there's a crisis in the office. But you can't do it 52 weeks of the year. So it's obviously not something, in my opinion, and I saw the video. Now, I have not seen what happened before and what happened after that, but that's a certain snippet I saw. It's probably an answer to a certain question at a town hall in the company. But the way he was smiling, I thought it was said half in jest.
So I heard the full video, and it starts by someone asking him that we have so many employees, such a large company, why do we have to work on Saturday? So he says, if I wish we could work on Sundays as well, because how much will a husband look at a wife and a wife look at a husband?
Yes, I have not taken that comment very seriously.
Okay, you're not taking. Manish Sabarwal, do you think it was made in jest? And if it was made in jest, why have people gotten so triggered by it? They have taken it seriously. It's kicked off a debate everywhere.
No, I think, 100 years ago, Keynes said that I think my grandchildren will work 15 hours a week. He has a wonderful essay on this because the idea of progress was that you run the first half of the marathon on your legs and the second half on your mind, right? That's true for careers, that's true for countries. So I think the promise of prosperity, mass prosperity in India, is currently being sabotaged by many other things also, right? Like bad urbanization. I mean, if you include commute time, most people in Gurgaon, Delhi and Bangalore and Bombay are probably already working an extra 3-4 hours a day. So do you include commute time in work time? So I think it's an unfair to take the comment in its literality. It is as Sanjeev said, an advice or an exhortation to work harder. Hard work is rewarded. Hard work, skills, brains are not enough. Hard work is very important in success. So I wouldn't take it literally. I think it was just advice to work hard, which is always good advice for everybody.
Now let's come down to the core of the debate, because Mr. Subramaniam's comments come after Mr. Narayan Murthy's comments. And then you've had a whole host of startup founders come in, various views coming in. Now, let me put the arguments to both of you one by one. Mr. Sabarwal, I'll start with you. Argument number one is that if I'm getting paid a pittance versus the founder of the company, why should I put in the same work as him or her?
I mean, what you're getting paid at the beginning of your career has no connection with what you'll get paid in a few years or at the end of your career based on your trajectory. I think, there is a power law. See, a good electrician or a good plumber is 4 times better than an average plumber. A good software engineer is 100 times better. A good investment manager is 200 times better than a bad investment manager. And a good CEO is 400 times better than a bad CEO. So unlike the factories or farm that most of us frame our work in, knowledge workers are very different. So I think that the notion that what you get paid in the early years of career should decide how much work you will put in is insane, and it's also bad advice for young people.
Okay, I'm going to put this question to you, Mr. Bhikchandani, and I don't know if we should do it in rapid fire style or not. Work harder or work smarter? Which would you prefer? An employee who shows in and, sits in office the whole day? or someone who is not there most of the time, but you know they will deliver?
But I think both. Why are they mutually exclusive? Work hard and work smart.
So how important is FaceTime for you, physical FaceTime?
I think a lot of what I do is management walking about. While I mean, work from home is a relatively recent thing. But the truth is, if you want teamwork, you want creativity, you want collaboration, a lot of it is done face to face.
And in terms of now the argument being made that this is a generational gap. If you see a lot of the debate right now also says that this is a generational gap. This is a generation of founders who, don't really care, or generation of corporates who don't really care about work-life balance. There is now, most of your workforce is made up of people for whom work-life balance is very, very important. What would you say to them, Mr. Bikhchandani?
Look, India is a country of 1.4 billion people, and there are all sorts of people, right? I think the key is to have an achievement mindset and not an entitlement mindset. And that makes a huge difference. So I would advise all young people, you are at the start of your career, you go with the flow, take life as it comes, and if you're required to work a little harder sometimes, it's okay.
So let Manish come in on that. Is that illusion seems to be that those who are talking about work-life balance perhaps are harping on it too much? Is that your view?
Maybe I would go with the Jain sort of philosophy of Anekantavad, right? The multiple-sidedness of truth, or Syadvad, which is the doctrine of maybe. Let's allow a lot of genetic diversity in how people think about their lives. For some people, working hard is the only form of learning. They didn't get the education, they couldn't go to the IIMs and IITs, and they have to cover up all their learning by doing in the first few years of their career. So I would avoid a one-size-fits-all, because that's not how humans are. I would avoid a notion that working hard is a lack of working smart, or working cognitively is different from working physically. So let's just allow a lot of genetically diverse, statistically independent operating models by companies. I don't think companies will put themselves at a disadvantage if people feel that they are being oppressive. But I would also recognize that many young people, find work as a source of identity. They find it as a source of purpose. They find it as a source of learning. And some people view work as just what they do for a living. So it's a little unfair to sort of go for a one-size-fits-all in this debate.
Ask you, Mr. Sabharwal, do you believe in work all the time and work is play and you don't count your hours, or do you believe in work-life balance personally?
I think is the Madhyam Marg of 50 an average of 0 and 100, or is it 50 all the time, is a personal decision. Some people may choose to sort of do 100 all out and then go 0 for some time, and some people will choose 50 all the time. So I don't think you can frame this question as somebody who's not working hard is unambitious, or somebody who's working hard or working long hours does not have notions of work-life balance. I mean, all of us have different opening balances in life, and what we see depends on where we are, where we stand, what our opening balance is. The two most important decisions a child in India makes are to choose your parent code wisely. Many of the people who are chiming in this debate are not getting the perspective of people who view, the ability to work long hours as an opportunity, and there are lots of people who view it as oppression. And I think there's enough companies and opportunities in India for both.
Mr. Bikhchandani, and this was a personal question. What is your number? Your weekly hour number, and what is your version of work-life balance?
I don't count the hours I work, and I don't count the hours I don't work. Right? But I know there is stuff to be done, both at the workplace, and there's stuff to be done outside the workplace, and both have to be done.
Okay. Do you count the hours you work, Mr. Sabharwal?
Sometimes 100 and sometimes 0, but it's probably 50 all the time.
Okay, that's math if it works. I think it works if you have a choice. If you have a choice and if it's not imposed.
No, I agree with you, but Tamanna, it's like this. There are certain situations, certain companies, certain industries where the nature of work is such that you got to take it as it comes. Now, let's take a look at your job. Yeah. You're a TV journalist. Yeah. Now, when news breaks, it breaks. You can't say, "Yaar, kal break kar le, aaj 5:30 baj gaye, main ja rahi hu ghar." Right? And if you work at 2 a.m. Chasing a story, you're working at 2 a.m. because that's when the story is breaking.
That's true.
Right?
That's true.
That's life.
That's
I began my career in advertising. I was in account servicing. It's really, I was never in control of my time. I was at the receiving end of everybody's delays, but I had to get the output done on time. So which meant that I was working late all the time.
No.
But that's life. And at the start of my career, I was enthusiastic and I was doing it. Right? And I was happy doing it because I was learning, I was achieving. I had the sense of moving ahead in life. Right? Or take a look at doctors. When baby hota hai, to baby hota hai. You can't say, tell everybody we want tomorrow at 11 o'clock in the morning. I'm not free for that. Right? Or take a look at the police. Take a look at the army. You cannot say, hey, there's a conflict on the border, but I work only 9 to 5.
Yeah, no. So some jobs demand it. If you don't love your job, you shouldn't be in a job that demands it. Yeah.
Most jobs in some situations will demand it.
Yeah.
Most jobs.
Yeah. Well, talking about what journalists have to do, Mr. Subramanian has definitely extended our work hours today because we're having this debate. And speaking of that, we had that conversation with everyone in the NDTV Profit newsroom. So I want to thank you so much, Sanjeev Bhikchandani and Manish Sabharwal, for joining us. And as we wrap up this show, I'm going to play out a cross-section of what people have said in the Profit newsroom today when we went and asked them what they thought of this debate.
First, we had the head of Infosys, Narayan Murthy, talk about how we should be working 70 hours a week. And now we have a new voice, the chairman of Larsen & Toubro, coming up and saying that we should be working 90 hours a week. He in fact suggests that we should also give up on weekends if possible because he does not understand the idea of it. Now, young people have always spoken about work-life balance, and therefore these comments have triggered a fresh outrage on social media. So we thought, why not take the comments of the workforce at NDTV Profit? So let's go across the newsroom to see what people think.
I think I don't want to give up on my Sundays, and frankly speaking, if we all had to work our Sundays as well, I think we would stop coming into work at all, which is not the most productive way for this nation to be.
I'll not meet anybody, I'll totally bed rot, but I want my Saturdays and Sundays to be Saturdays and Sundays. I don't want to meet any of my office employees on weekends. Why? No, not at all.
It's just not feasible, right? Because you need to take a break. You need that time for yourself and to do things that are not work.
If you work for 90 hours, your mind will stop functioning. So I think we all deserve a break in between.
People should be allowed to have their personal life as well as their professional life. And I don't necessarily believe that more working hours means more productivity. So we can work smart rather than working too much.
I disagree, big time.
Why?
I don't think it's fair for upper management to comment how employees are supposed to work for 90 hours a week.
I think we will only create quantity and not quality.
Bad idea, very bad idea.
If you ask me on a Friday, I don't even know what to work for the next 1 hour.
I think it's easy to tell somebody to work 90 hours when your bank account isn't empty by the 10th of the first month.
He simply doesn't understand the concept of burnout, because if I'm working 6 days and after that you are expecting me to work more, I will simply not be productive.
No.
Even for money?
No.
A lot of money?
No.
So if given a choice, how many hours would you work for in a week?
I think I'll stick to what I have, which is 45 to 50 hours a week.
Somewhere around 45 to 50 hours sounds better.
What if you were given a lot of money to work 90 hours a week, would you?
I would say that you can keep the money and I will keep my mental peace to myself.
Mental health for the win. Please, peace. We want peace.
The world of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things around because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The world of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things around because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only.
Let me paint a picture for you. It's a Monday, you're lying on a beach, and the only thing that you're worried about is where to grab lunch and dinner. You've got your favorite beverage in your hand, and maybe it's even a pina colada. And you know what? You can choose to do this for another month without someone telling you to get back to work. Sounds impossible? And yet, it is possible. In this scenario, you've achieved what many, many people are dreaming of. You're financially independent and have retired early, and that is called FIRE. Of course, I failed to mention the age at which you're doing this. Here's assuming that you're maybe in your 40s or even in your late 30s if you're lucky. Today's episode is going to go into how you can achieve this elusive target. Joining me on the show is Santosh Joseph of Germinate Investor Services. Santosh, thanks so much for taking the time.
Hi Alex, glad to be back.
Are you dreaming of FIRE?
Oh, I'd love to. In fact, when you were painting that picture, I was wishing it was me.
Doesn't everybody
and it doesn't matter whether it's the beach or the mountains, as long as it's that kind of a format.
And so everybody that I've spoken to, irrespective of what they're doing, they're enamored by this idea of not having to, and especially those people that are in 9 to 5s and or maybe 9-10 hour work days. They don't want to do it anymore. At least they want to have the option to not do it anymore.
Correct. So I think increasingly people are realizing that they want a good work-life balance, and because they're not able to achieve it at work, they have to make the segregation that when I'm working, I'm going to slog it out, so that when I retire, I can, live the picture that you just beautifully painted for us. That is that I can chill out, not be worried about the stuff that would normally worry me, but worry about mundane things like where do I get my meal from or where do I go for a walk for. So this is the kind of dreams and aspirations that we have, and it's getting more pronounced today that people want to enjoy life. There was a time where it was about career, it's about money, it's about meeting certain milestones or bucket lists. Today, FIRE is a bucket list.
FIRE is a goal. And, even this week I spoke to somebody who was aiming to do this 34-year-old gentleman who wanted to do this in 11 years' time. But some of the numbers were a little startling to him. And so the advice that he got from one of the experts like yourself was that he might have to work till he's 55 or 57, and only then would that be achievable. This formula, how does it work?
See, the general thumb rule for the FIRE is that you have about 25x. Now, what is this 25x? That you don't retire till you at least have 25 times of your annual expenses that you need. Now, let's actually break this down. Assuming you need ₹1,00,000 a month, which translates to 12 lakhs. You have to multiply 12 into 25. That would be over 3 crores. That's the kind of money that you need to be able to retire today. So that at retirement, you live off on a small portion of the income that this money can generate, so that you don't have to work and you can live that dream that you're just dreaming today while you're working.
So, but what is incongruous to me, and what sometimes may be a bit of a fly in the ointment, if you can call it that, is that this 1 lakh rupees is all well and good. But you see these inflation calculators and they're very scary. They're talking about what your expenses are going to be in 20 years, and it's some obscene number that you can't even imagine how you're going to spend that much money. It doesn't add up, does it, Santosh?
Absolutely. See, for starters, the expense that we are going through today for our lifestyle expenses is way greater than what one imagined 20 years ago. I mean, 20 years ago, when we had so much of lesser lifestyle, many of us, especially the generation of our parents and maybe even for us when we started our careers, was very simple, life was very easy. But today, thanks to all the consumerism that we have, costs have gone up, and more so voluntarily. Now, we know when we retire, we don't want to cut corners, but we want to enjoy that retirement time. So therefore, it's one, the need for more spending capacity, and two, the cost at which this is going to come, especially when it's 20, 25, 30 years from now. Even a small percentage rate of change of inflation will have a very significant impact of how much money you need. Therefore, for any successful FIRE establishment, that is your being ready to retire early, it begins by number one, planning early. And I think the previous example that you gave, when someone did this assessment and they realized that do not retire now, wait till 55 till you retire, is good advice. Because how do you solve it? Either you accumulate more and hope that your accumulation plus the growth helps you achieve that number, or continue to work longer. Just tell yourself you're not ready yet, right? Ready yet to be able to afford the lifestyle that you want to. Therefore, plan a lot more, save a lot more, and hope even the savings also grow well. What most people calculate is how much my money can grow. But the key vital ingredient is how much are you putting aside to the goal.
Okay, how much are you contributing? So therefore, FIRE is, yes, it is a goal, but it is not a final destination in that sense. It is a question. Are you ready to retire? And sometimes the answer is no.
So the interesting part is all of us, thanks to the beautiful picture that you painted, want it.
Yes.
And maybe we convert that goal into very actionable steps, and we are disciplined to do that. The big question is, when it comes to the point where maybe you're FIRE ready, are you willing to then take the plunge and enjoy it?
Are you mentally ready?
Yeah, mentally ready. Because see, it's one thing to work hard. It's another thing to be disciplined to save and wait for 20, 25 years. Because if you worked hard and if you've been prudent and disciplined to save and spend that, save and grow that money, I don't know whether you have the mental capacity to enjoy it. I think that's the realization we are having as the Indian investor and population, that we may be great in working hard and saving. We're not that great in enjoying that benefit.
That's a good point that you make, because ultimately it's been described perhaps as the dog that is chasing the car, and when it catches the car, it does not know what to do with it.
Absolutely. I think you said it well.
And so therefore, you're talking about a situation where you don't know what you are going to do with the time that you have on your hands, right? I talk about my own dad.
Yeah, it's like this. It's what ticks in your mind.
Yeah.
If you're disciplined to follow a target, if you're disciplined to save, it's going against the grain to actually spend that money.
Yeah.
Now you want to let it continue to grow even more, because also don't forget, when you save for 20, 30 years, you begin to see the power of compounding on your money. The little that you saved has become exponentially greater. See, the power of compounding is only rewarding for the people who are at it for a long period of time. And when you've seen the benefit, you want to let it grow even longer. That prohibits you from enjoying it.
So let's then classify this. And I know that this is a concept that a lot of people have spoken about. Ultimately, then, FIRE should allow you to say at some point of time, I don't want to do this anymore, but it's an option. It's a choice that you have available to you, and you work towards having that choice. Is that fair?
Number one, it's a choice. Number two, it's a decision even before the choice that you have to make that, hey, I want to be ready. Now, the choice that we spoke about would be beautiful, that when you're financially ready to retire early, but you decide to prolong it, and that's a sweet spot.
Yeah.
It's like you got all the money, you can be enjoying the luxuries of saving the money, but yet you got the physical stamina and energy to work a little more. I think that is a great spot to be, because on one hand, you're working out because you have no choice. On the other hand, you're continuing to work even though you don't need to work. I mean, you're talking a different realm there.
And your mindset changes.
Absolutely.
There's nobody who's going to be able to bully you at work, by the way.
Well, some of us self-bully ourselves with the commitments that we make. It could be as simple as your home loan, is your living expenses, your lifestyle expenses. Sometimes there is external pressure. Sometimes there is pressure that we've taken it upon ourselves with the lifestyles that we need.
Can you be at a FIRE stage without having your own house?
You can, but remember, one of the effective ways to be financially independent and to be able to retire early is to have literally zero liabilities, one. Number two, ensure that your lifestyle is largely sorted. So therefore, when you have your own home, where there's no rent to pay and there's no more leftover payments to make, or you know that this is a secure asset of significant net worth in itself, actually plays into the FIRE. So is there a hard and fast rule that you should not be in debt even at towards the end of FIRE? No, but it makes great sense to be absolutely liability free and to have assets, not only financial but also physical. So therefore, home is an asset which is not financial but physical, which also helps you build net worth and liability-free, stress-free living.
Okay, to talk about this generation of capital that you absolutely need, it's only possible, I would think, using growth assets. But how do you go about doing this? Everybody says start early. Would you say that you're in an incredibly good position if you achieve a certain landmark within a certain time frame? And I'm talking about amassing a certain amount of money. Incidentally, we did talk about building your first crore on this very program, and I thought that was a fascinating conversation, because that's the first real major hurdle that you need to overcome when you're building wealth, right?
So the benefit for many of our viewers watching this is that while you're working towards FIRE, we've largely ignored the ability of growth assets playing the play. We know it's important for us to save. Basically, we're accumulating the money. The second half is the value that it produces through growth assets. But before that, we spoke about starting early. I mean, it's the most underrated aspect of FIRE that the sooner you start, the better it is. In fact, from the first paycheck, if you set the ball in motion, it's good. And therefore, when you start from the first paycheck in your late 20s to early 30s, if you have a milestone, for example, whether it's 50 lakh or a 1 crore or more than 1 crore, you know, you overcome a psychological barrier. We all know, and we've said this, the first 1 crore is always difficult. The second 1 crore is not difficult. And therefore, the first 10 crore is a mountain of a goal. But after 10 crores you've achieved, and then when you talk about the power of compounding, you'll start adding crores easily, and the 10 becomes 20, 30.
So for people that missed that episode and who want to understand whether it's actually possible, would you say that they would be in a fantastic position if they achieve that 1 crore before 35?
Before 35, and for some of you are going to be a little more slower depending on your career or even the propensity to save, even 40 is a great number. Because even at 40, if you've got a crore of savings, right, that puts you into the top, maybe less than 1% of the country with a saving net worth of a crore.
So I know that a lot of people look at these calculations and look at these projections and they scoff at it. right? They're unbelieving practically, right? But you're the numbers guy, so why don't you lay it out and say, how is this actually possible? Because, and I know that you're going to talk about 12%, and a lot of people will say, why 12%, where we've grown at 18, 19% over the last 4 or 5 years, but then we'll get to that as well. But at 12%, how long would it take for me to achieve that number?
There is a nice indication on your rear view mirrors when you drive the car that objects in the mirror appear closer than they actually are.
Yeah.
In fact, that's the reality of our financial planning. They're actually closer, but we're not able to make right judgment to it. And therefore, the standard way that we respond to that is saying, please start early. Be a lot more disciplined even if you don't feel up to it. Now comes to the numbers. See, the numbers are simple. Now for the people who don't like numbers, it feels a little daunting, but they're actually simple. So I took a simple number of even a 25,000 rupees saving every month, and assuming you started 30, not in your early 20s, some people miss the bus, but I'm repeating again.
And for some people, I know, miss the bus, and some people just can't, Santosh.
Even if you started 30, a 25,000 rupee investment into 12 is about 3 lakhs a year. For 10 years, it is 30 lakhs. For 20 years, it is 60 lakh. And for 30 years, it is 90 lakhs. Taking 12%. Now, how do I arrive at 12%? I'm just taking a longer term, lower average of what our larger benchmark index has done over 10 and 20 years.
Nifty 50.
Now take Nifty 50. For the last 10 years, it's averaged slightly more than 13-14%. Even on a 20-year basis, the number is between 13.5 to 14.5%. Now, you know, Nifty is far more rewarding to you than the world's greatest investor, Warren Buffett.
Yes.
Right? Which means you have something that is favorably going for you, that by being a simple, passive investing for dummies, you're able to make a lot more of your money than what you save. Now, what happens to that 90 lakhs?
But before you get to that, just to drive home the point, even if you're not looking at Nifty 50, just look at nominal GDP growth, which is how much your economy is essentially growing. You're talking about real GDP growth plus inflation, right? Which is what everybody looks at. And you're adding a couple of percentage points over that.
For their market efficiency.
So that the companies that you're investing in are perhaps growing faster than the country as a whole is growing. And so you're expecting 12%. And that's a fair
Yes,
estimate.
absolutely fair. Because see, you take at any given point, over long periods of time, 5 to 6% inflation is normal, especially for a developing economy like India. You're bound to experience at a retail ground level a 5 to 6% inflation, right? And at the growth level, I think we should continue to be at that 5 to 6%. I'm sure the policymakers and the government will want much higher growth. But 12 is not a big ask.
And durable is 6 to 7%, whatever, for a country like us.
So the 12 is not a far-fetched number. It's a slightly lower of the long-term averages of what the markets have delivered.
12% is achievable. Let's come back to our example. You talked about 25,000 per month, 3 lakh per year.
So that's about 90 lakh over a 30-year period.
Yes.
Now, let's be practical that nobody's going to save only 25,000 when you're in your 30 and stick to that number. As you progress in your career and your income level, you're going to, of course, save a lot more, at least keeping in line with the amount of money that you earn. But for this hypothesis, we'll just stick to 90 lakhs saved over a 30-year period. But the resultant being well over 15 crores is the big bonus for you there. So in the pursuit towards FIRE, your job is to figure out how much more you can contribute towards the goal. Let the market give you the power of compounding in the growth assets that you spoke about. Now, this is the benefit of the modern India that we live in today, that we have plenty of opportunities to participate in growth assets, both financially and non-financially. So I'm making that as a generic call, that growth is possible. Your job and my job is to accumulate as much as possible so that your FIRE is a lot more achievable. If there was no growth assets, believe me, we would not be able to make all these assumptions in the plan, because the challenge would be then when would we meet our number. So look at this 15 crores or 17 odd crores. Only 90 lakhs is coming from your contribution. A significant chunk, well over 80-90%, is come from the growth of the assets. So time is of big importance. One is to let it continue. Two is to begin early. Therefore, when you begin early and you are going to contribute well, FIRE is going to happen. So therefore, you don't have to be worried, will I ever be FIRE ready? You can be FIRE ready because of these two critical variables. One, your contributions. Two, the time you allow it to grow.
And the third aspect, which is the return, which we've assumed at 12%, just to drive home the point. the various people that have achieved a 19 to 20% compounded growth over the course of the last 4 years because they managed to invest when the COVID-19 pandemic happened, will scoff a little bit, but why don't you help them understand why this is so powerful? Because anything above that will change the target completely.
See, when you take a 12%, especially the newer investors that have come in the last 3 to 4 years, you look at it and say, why only 12% and markets can deliver a lot more? Because the last 3 to 5 years have been particularly rewarding to the investors, and most people today are making an assumption that a 15 or 18 is very doable. We are purposely kind of toning it down, because that's also another way to be fire ready, that you don't be very optimistic from a long-term perspective beyond a 12% number. 12% also is optimistic. Now, why we are saying that is, when you plan for 12% and you have a target in mind, any extra 1%, 2%, 3% growth helps you be fire ready early. Or helps you bulk up a lot more, that even if you had a certain number, you'll kind of achieve a slightly more bigger corpus. Now remember that 30-year period, even a 1% delta or change for the positive, like 12 becomes 13 or 13 becomes 14, will add a few crores to your savings, which is the bonus. That's exactly what the last 4-5 years investors have experienced. If you were an investor who started towards your fire the last 15-20 years ago and you are nearing ending that period, you're very well rewarded. Now, we do not know market cycles. I don't know in 2045 will I have the last 3 years at 18% or 8% or 12%. Therefore, from a longer term perspective, we have sufficient data both globally and domestically that why something like a 12% is optimistic yet practical.
Yeah, and it's not as esoteric as certain other things that people have written about, where a butterfly wing flaps here and there's a volcano somewhere else. But you know, it's much more measurable, it's much more realistic, and it's achievable as well. But the question is that enough? You talked about how a 15 crore corpus can be built, and it's actually possible. But a lot of people will wonder, is that going to be enough for a longer period of time? So is that also something you need to bear in mind?
That's the whole concept of being fire ready, is that when you're coming closer to the goal, number one, you know how much you've accumulated and how much that has grown into. I think today what we are doing is we're trying to make a hypothesis 15-year, 20-year,
yes,
based on the inflation that you think is right. Now you could, you know, factor a 5% or a 7% or a 8% even, because we're a growing economy. But when you're coming closer to the target, it's the same thing of the mirror, analogy we spoke about, you will know your actual number. Because
becomes clearer.
It becomes clearer. And second thing is, you'll also know what your lifestyle entails. At a younger age, your lifestyle is more about impulse spending and, you know, consumerism. Towards the end, closer to the retirement part, maybe it's healthcare, maybe it's something else. Right? So therefore, you have to factor in those specific costs. So while fire is a good number to work at, you have to be a little flexible, both in terms of the amount of money that you're contributing and even about the realistic expectation of how you live off it.
So it might be a good idea for you to maybe save more than just what the fire indicator gives you. And the more you have, the more beneficial it is.
So therefore, the 25x rule that you have for
is
fire
just a thumb rule.
Is just a thumb rule. The further into, I mean, greater than the 25 you are, the more safer you are. Because then you're trying to take out any ugly turn the inflation curveball may come at you. So therefore, if you are at maybe 30 times or 35 times or 40 times, now that 35, 40 times can happen because of two things. Number one, you were just prudent to save more, or you were also rewarded with growth assets, or you also got in a lot of lump sum ad hoc payments to be gathered into your fire kitty. A classic example is there are some people who work today for startups or companies that have gone public.
So ESOPs.
So that's a one time or maybe 2 times in a lifetime that most people would be fortunate to participate in it. Now, at 35, if you were hit with an ESOP, you don't think, okay, I've hit that number, I'm going to retire. What you think is, I use this to, you know, kind of strengthen and shore up my fire account and continue to work, right? So therefore you're double fortressing the whole thing and building a moat around your fire.
Yeah, and nobody's suggesting that you should retire at a certain age as soon as you hit that fire target. You have the option, like we've established. The last aspect is, do you change the construction of your corpus once you've hit that mark? Because one would assume that once you've gotten to that point, you want to be a little bit more conservative.
See, to arrive at that point, initially you begin with growth assets, and you also keep in mind that you have time to benefit from you. So therefore, don't be worried about the short-term nature of how the markets are volatile. But as you come closer to it, we once spoke about that the number, when you come closer to it, as it becomes clearer, you realign it. Similarly, even your portfolio construct. If you started off very aggressively, then towards the end, you moderate. You do not need to be aggressive, because the idea of being aggressive was to capture more growth. Now, towards the end, if you've already captured the growth, now you want to stabilize or lock in that growth. So that's why the whole portfolio construction is dependent on your actual requirement out of the FIRE principle. If you have kind of adequately met the goal with abundant provisions, then you tone down the riskiness in your portfolio. It cannot be that you hit the number, your portfolio is aggressive, then one small 6 months, 1 year market cycle depreciates the value of your investment. So
it can be anywhere between 10 to 15 to 20%.
Easy. Yeah. And remember, the 10 to 20% is not on what you saved, is on what is accumulated. Yeah. And that's a big number. Yeah. So what you do is, like 1 or 2 years before your goal achievement, you take a stock of things. Similarly, you even take a stock of realigning your portfolio. If you've met your goals as far as the financial number is concerned, you realign the portfolio to drop the risk, include stability, and maybe start income.
Yeah. That's a good point. And I hope that everybody listening and reaches that point.
In fact, that's the interesting part of keeping your personal goals incorporated to your portfolio to keep it dynamic, because there's no two people that are same. If you got your FIRE number and you got enough longevity in you, both for a career and for your income, maybe at that time you'll make your portfolio even more aggressive, because now your FIRE is done, you're still earning money, you don't want to retire. That means you can lever up your portfolio risk even more. Essentially, it's a disposition. And by planning well, you offer yourself a choice whether I should cut risk or increase risk.
And the risk reward at that point might just be favorable for you. Santosh, thanks so much for joining in, for giving us that perspective.
Thanks, Alex. Always a pleasure talking with you.
And it's a pleasure for me as well. That brings us to the end of this edition of MoneyWise. Hopefully this has gotten you thinking about your own FIRE moment. Let us know what you think in the comment section, and do stay tuned. Lots more coming up on NDTV Profit.
The world of capital markets and trading post-Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first 2 months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The world of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The world of capital markets and trading post Zerodha is probably never going to be the same. Chief Executive Officer and Managing Director of TCS, spoke with us on the quarter gone by. Listen in.
In the early part of the quarter, we continue to see the same kind of prioritization of the programs. But as we went through, we realized a much better deal bookings, and also the quality of the deal bookings. And also we started seeing some discretionary projects, some revival of the discretionary projects. All these things put together, most importantly, very strong TCV, particularly in BFSI, in North America, in retail, which are the important verticals for us, important geography. All these things put together, and also some yearly conversations with our clients where we hear there could be a positive upward bias in the budget for next year. They're not frozen yet, still discussion, but there is a positive upward bias in budget is what we are hearing. All these things put together gives us a comfort that CY25 can be better than CY24.
We've seen the last 2 quarters interest cuts happening in the US. That's been positive for companies. Yes, economy has been resilient, 2% plus, growing at a good rate. Labor data has been very robust, which is coming in. Is that one of the reasons also why you're seeing a revival in discretionary spends?
That also. I said, for us, most importantly, the conversations that we are having with our clients and the deal booking. So, but of course, the other macros also have an important role. But the labor market can cut both ways, right? Labor market tight, if inflation doesn't come down, maybe interest rates won't come down. It can have a negative impact. But at this time, our yearly impressions are based on our discussions with our customers and kind of deals that we are signing.
There are a couple of headwinds which are coming in, Jan 28 being one, Trump administration coming into play. But it's also positive for some of the manufacturing companies because he's talking about tax cuts, which will drive more spends from the manufacturing side. Healthcare policy, more certainty may come in once Trump comes in. These are some of the areas which have been slow for you, and what kind of expectation do you have for that?
So Jan 28th, I'm not looking at a headwind. Okay, like you said, more clarity will emerge and uncertainty will come down. So which could be a positive for us. And as I said, there is certain expectation in industries like retail and banking already, where there is a positive move towards discretionary programs. So all of them, healthcare is one industry where we are still waiting for clarity on what would be the what new regulations that can come in. But other than healthcare and life sciences, there is some amount of positivity in other industries.
$10.2 billion, I think one of the best third quarter TCVs for you. Give us a flavor of that TCV. Where is it coming from, which sector? And do you see now, you said a revival of discretionary spend coming in. How much of that was built into the $10.2 billion TCV?
So I had already given the exact numbers in the press releases and all. But if you look at, it's a broad growth across geographies as well as industry verticals. Almost all industry verticals we had an increase in the TCV. Similarly, almost North America had one strong TCV growth. Europe, in fact, had one of the best TCVs in Q3. So it's very broad based. And in terms of quality of projects also, we are apart from vendor consolidation and optimization kind of projects which are now which do have a significant presence. As I said, there's a increasing proportion of discretionary work. We are also seeing, particularly in the pipeline, if you look at, there are more projects around technology modernization. As a run-up to leveraging AI, more data projects are coming up. So that's what is giving us confidence and hope. But it's slowly the mix is moving towards transformative engagements than optimization.
You had mentioned and indicated as well that clients were taking more time in Q2 and Q3 to close the deal. Has that improved a bit in Q3, and how do you see Q4?
We did a sample on the deals that are more than 20 million. Based on that, we have been able to see that there is a shortening of the deal cycles. Good by few weeks, which is significant, and also indicative of the better decision-making environment that's overall. We need to see what happens in Q4, but compared to Q2, Q3 decision-making cycles have improved.
Your earnings call, a lot of emphasis was put on BSNL. Just want to get a clarity on BSNL because you've completed 70% of the project.
That's right.
How do you see the deal tapering out? And when you say that CY25 is going to be better than CY24, what is the kind of order book optimism that you have that will replace BSNL deal and you'll be able to grow at a healthy rate as well?
See, we expect this to taper off in Q4 of FY25 and maybe Q1, Q2. That will be some tail still, like by then it will taper off. But we do expect that to be replaced by some additional work in India geography or other regional markets, or also the new TCV we are getting in from other overseas geographies. But when I say that CY25 would be better than CY24, it's more from a broader qualitative perspective. We have to we'll find a way to replace BSNL revenue, but general overall qualitatively the environment is much better in CY25.
Do you see your core verticals coming back on full stream to take on the load, heavy lifting?
That's the expectation. But there will be some support that will be provided by the regional markets also.
In FY23, we saw a good TCV win. But the market was disappointed that conversion was slow in FY24. Right. Now FY25 we are seeing a good TCV build up. If I look at the last 12 months, 40 billion odd is the TCV that you have got. Do you see better conversion rate now because of the kind of outlook you have this time?
That is broadly the expectation. Again, that's, as I said, coming from the other indicators like the deal cycle, kind of projects that we are deal up mix and discretionary work. So the mix of these projects gives us a confidence that there will be a better conversion of TCV into revenue.
AI has been one, the surprise element, and heard you talking extensively on the kind of work that you're doing for some of them. Healthcare especially, yes. I think you've used AI to identify molecules for cancer and others. Yeah. If you can elaborate on that.
See, this is one for the large pharma company. They've been looking at identifying what would be the right. I'm not a biologist, so pardon me if I use wrong terminology. They have been trying to identify the molecules based on the target protein. And so we used AI to first come up with a list of 1300 molecules that could be candidates based on the target given. And we used further filters to reduce that 1300 to 12. Now this 12 is in the in vitro assessment in the laboratories. So this process greatly accelerates the identification of candidate molecules. We believe that this kind of work could not have happened without the use of generative AI.
Okay. Do you see that because of this, there could be an impact on volumes going forward?
No, that's what I'm saying. This is a work that could not have happened without use of. It's a net new work. There is generative AI is going to, while there are areas where it will bring in productivity improvement, there are areas where it will create net new work. So which is going to be positive. There would be some productivity improvement that will happen in it, so which would have a negative impact on demand. But our overall assessment is net it's going to be positive. But as a technology company, you have to be ready. The role of a programmer might change. What are the roles that we have today? We may not have, there will not be expansion or increase in demand for the same roles.
Yeah.
But new categories of roles will come in. But there will be some existing categories, there will be a shrinkage, but new categories will come in. So we have to continuously train our people to be ready for this new technology and leverage it for the betterment of our customers.
Let's talk about a group of stocks that was in focus yesterday on account of significant developments. Of course, we were talking about United Breweries, which has halted beer supply to Telangana, and basically Telangana State Beverages Corp, which is an actor for the Telangana government. What are the implications of that move for the rest of the Alcobev companies that cater to this state, or used to at least cater to this state? Harsh is joining in to give you some perspective. Harsh?
Well, Alex, 3 points that I'd like to make here. First, UBL contributes significantly to Telangana's alcohol consumption. 70% of Telangana's alcohol consumption comes straight from UBL as a supplier. So that's the first big point. Large opportunity if this embargo were to sustain for a longer period of time. That's the point I'm trying to make. Second, what's the hit on UBL as a result of this? Around 18 to 20% of UBL's revenue comes from Telangana state, and therefore some bit of hit even on UBL. But mind you, Telangana may have 8 to 10 days worth of stock already there in reserve. And therefore, maybe for a period of 10 days, likely there will be low to no impact on both UBL as well as Telangana. So the decision that Telangana needs to make is, should they hike prices by 33%? That's the ask coming from UBL. Is it a fair ask or not? Not sure, is subjective. We'll try and break that down, hopefully, with the conversation we're having. And second, if not UBL, what are the alternatives? And SOM, who we are speaking with, is a viable alternative, because SOM was looking to enter the Telangana market as per reports back in 2023. Is that something that they are actively looking at is, of course, another question, and how large is the opportunity if that is so? And would they be willing to take it? Because pricing is a challenge in Telangana. Telangana's pricing is at least 25 to 30% lower than the national average. And therefore, that may also be a concern. All of those factors would clearly be critical talking points when we have this conversation.
Okay, thank you. And those are some of the points. We'll start with Mr. J.K. Arora first off. He's MD of SOM Distilleries and Breweries. We'll also be joined in just a bit by Vinod Giri. He's Director General of CIABC, that's the Association of beverage makers and bottlers in the state of Telangana. Mr. Arora, very good morning. Thank you so much for speaking with us here at NDTV Profit. We're just trying to get a sense of how big this issue is, and is this an industry issue? Of course, one player has decided to stop supplies to the state in a standoff. We've seen a response from the state as well as the minister, the excise minister, saying that there was a monopoly, etc. How does this impact you?
No, it's not a question of an individual UB. It's a question of handling the business as a whole. So this issue has not come up overnight or as a instant thing. It is happening for many years. You see, I will tell you a very small example. Suppose a brewery bills to the state at the rate of say 400 rupees a case. Okay, and brewery makes by 10% EBITDA, make it 40 rupees per case, out of which gross EBITDA, out of which about 20-25 rupees is the expenditure, and the net profit is about 15 to 20 or maybe 10-15 rupees a case. Now, a business company makes 15 rupees a case. Government makes 300% on 400 rupees. That's a 1500 rupees. So government on a product makes 1500 rupees and businessman makes a 15-20 rupees a case. You see the graph. And now then you make so much of money, you get all 1500 rupees per case billing to the retail, get money in advance before making the supplies. So it is not that you are short of money.
Just 1 minute, Mr. Arora, just 1 minute. So will you do what UB has done? You're very rightly saying it's an industry issue, but right now you have the 70% player who's pulled out. Will you follow? Will others follow? Vineet Sambre joining in for a longer term view though. He's head equities DSP investment managers. Vineet, very good morning to you and great to have you on the show today.
Hi, good morning.
It's jittery out there. It's jittery out there, I would say, on a global markets perspective, Indian markets definitely. What is your sense of what's going on right now?
Yeah, so see, I think as a market, first of all, last 3 years have been beautiful for the Indian equities, and we have seen sort of a linear up move as far as the markets are concerned. But we have actually in a way reached a bit of an inflection point when we look at the corporate earnings growth, and from a high growth of, let's say, 20% plus over the course of the last 3 years, now we are heading towards more normalized the India rate of corporate earnings, which is, let's say, 11 to 12% kind of a rate as far as the next few years are concerned. But FY25, we are seeing even slower rate than that. And I think if we just go by the stock market returns over a long period of time, they tend to track the earnings growth, quite beautifully. So from that perspective, I think markets had seen quite a big up move in the last 3 years on the back of strong earnings growth. And I would say that most of the macro events which keeps taking place tends to get addressed if the growth rates are decent. And when we see that sort of challenge coming up, I would say that markets will sort of take a cue from there. We would sort of enter this year with a bit of a caution because of the earnings growth moderating. And I would say once we have some bit of visibility on the earnings catching up, and that's where when we would say that the markets will try and find a new direction. One more point to add, let me also mention that the last 3 years we have seen a new set of investors which have entered the market, and they have not seen maybe volatility or moderation in earnings, and hence this becomes crucial. And I say this is an inflection point because their behaviors and their volatility, their total flows in the market is also going to impact how the markets are going to look like.
I'm just wondering if you are going to be looking at this present correction as an opportunity to shore up, Vineet, and with a longer term perspective, this is the year that's giving you an opportunity. If you look at it from that point of view, the last 4 years maybe didn't. Do you have that perspective at all, or is that overly optimistic?
No, I think you're right. We keep looking for these anomalies in the market, and especially so in a bull market environment where you hardly find ideas with a good margin of safety. So I think this correction, in a way, from our perspective, definitely is a healthy correction. It was much needed during, as we see, from the last 3 years of linear up move. And I think we'll try and find opportunities. Nonetheless, let me also add that even during the bull markets, there are a lot of segments which are not participating equally in the bull market. So in those periods, we keep looking at those kind of opportunities. So you're right. From the long-term perspective, when we are looking at the India growth story, where we are convinced about our economy and the long-term picture of the economy, I think these periods like these are turning out to be, sort of a opportune time for us to, not bottom fish, but try to figure out opportunities with a decent margin of safety.
Vineet, good morning. Hiral on this side. Interesting point that you made as well, that yes, whether a bull market or a bear market, you do find opportunities of investments. But taking the current correction into consideration, which you say is a healthy one, where are you finding the moat? Where are you seeing reasonable return on capital employed? Because those are the companies which actually have the ability to outpace the growth story then.
You're absolutely right, Hiral. We are trying to look for companies with strong moats, good cash flow, decent ROCs. And I think across sectors, we have great divergence. There are companies which provide those kind of metrics. And then there are companies which are running on sort of narratives. So across the sector, we try to find these opportunities. But broadly, if I have to, talk from the sector perspective, we see such opportunities largely present in sectors like healthcare, within which we have pharmaceutical, hospitals, segment like IT, where companies do generate decent cash flows, ROEs. Consumer as a pack has structurally been a segment which does provide those opportunities. Now, in all of these, what we need to definitely do is try and understand where in the valuation and business cycles are these, and then try to build our exposures. So at the moment, we are thinking about healthcare being one where the sustainability of earnings is going to be good, and the valuations are not, they have gone higher, but they're not very expensive in a way. IT sector, we saw TCS calling out that there are signs of recovery. The decision making is turning out faster. So I would imagine that as the US sort of comes back in terms of the momentum, the IT sector should also produce decent opportunities. The stocks, while they are not very cheap, but as the business momentum picks up, maybe we would find opportunities out there. Similarly, in case of consumers, we believe consumer has been a story which has been again got moderated since COVID. Earlier, it used to be the entry level. Now we are seeing more urban consumption sort of getting hit. I would say that the opportunity here is going to be pretty long term. The Indians, the middle age income, as the income level rises, I think they are going to spend on better products, high quality products, and we believe that that's category which we would want to look at during the down cycle. Maybe the valuations are not again very, very attractive, but in this market, I think these are the kind of opportunities we are sort of looking for as far as our funds are concerned.
Right. We need one space that I want to talk to you about is how global markets are getting tied up with India, right? You're expecting the dollar to decline. The bond yield curve has also deepened, right? So because of the bond yield curve, which has steepened, the dollar is declining. You're talking about fewer rate cuts in the US that probably will aid emerging markets as well. So how are you looking at the export-facing sectors? How does that outlook change, number one? And do you think then the domestic cyclicals are well placed?
So see, at the moment, I think we are, first of all, let us break down the whole exports opportunities into the ones which are already present, companies which are already competitive and they are continuing to export. So within that, we have, IT generally doing well. If the trend changes, they will capture their share of growth. Auto ancillaries, I think they have built robust businesses. They have built very competitive businesses to tap the international markets. I think those will continue and that is only going to grow. The third category is the, as I said, healthcare. I think there Indian companies have found their sweet spot in terms of their strength of chemistry, their strength of understanding the US generics market, and I think India has a great competence out there as well. So I think some of these, I don't find a reason for these companies to not progressively keep doing well as far as the international markets are concerned. I think the newer opportunities is something which maybe we are trying to target, but there could be some kind of let's say the time horizons could may not match as the expectation. So the new areas like the electronics or the components, electronic components, or the air conditioner, all of these categories where the government is trying to push, there we are seeing that companies could take slightly longer, but I think those are the opportunities which will mean that our the external accounts slightly keep becoming better eventually, and it helps our currency. So I think that's what I believe as far as the external environment is concerned. To answer your question about where are we aligning ourselves in terms of the portfolio mix, I think we are okay even looking at some of the companies which are established globally and are trying to seek global share of the market. Today, some regions like Europe and all may be slow for them, but I think the long-term picture gives a good view about these companies to us. But by and large, domestic-oriented economy, domestic-linked companies are likely to do slightly better in the current global environment as such.
Right. So, Vineet, we just have a minute to go right now. The top pick with regards to the sector that you have as of now.
So I think clearly, what, as I said, we are trying to look at maybe the sectors which are today in the lows of their cycle, and we see that a lot of the companies within the, let's say, building materials or chemicals or metals, they have seen the low cycle today because of all the macro setup or the environment where we are in today. I would imagine that as the cycles change, some of these categories should do well. We continue to have a good view on healthcare, which should remain for this year. Last year, that healthcare sector produced the highest return. I think that could continue this year as well. And maybe IT comes out as a dark horse and starts doing well. So I think you asked one, but I have given 2-3 options from my side.
Right. So these are 3 options that Vineet is betting big on as well from here on. Thank you, Vineet, so much.
The world of capital markets and trading post-Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first 2 months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The world of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first 2 months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for...
Business plan is so badly written. So I got asked to go get a real job.
But there's always that one uncle, na? Journalists are knocking on your door and you're saying, my brother has his own podcast, why do I have to talk to you? How do you define a disruptor? It's probably someone who changes the game forever and in a tangible, meaningful way. My guest today on this series and this episode of The Disruptor is someone who has done it without doubt. The world of capital markets and trading post Zerodha is probably never going to be the same. What also may have helped is the right time, the right mix of factors, the pandemic, maybe all of that. But what was the inspiration behind what we now know as discount broking? Of course, many others in the game. And what continues to inspire Nitin Kamath, founder and CEO of Zerodha? That's what we're going to start with. Nitin, thank you so much for giving us your time.
Oh, pleasure.
Yeah. So let's start at the beginning. And I think when you started out, was the idea to change things down because you loved trading? First of all, what is a Bangalore boy doing in the capital markets, which is supposed to be, all about Bombay?
No, I was trading the markets from the late 90s, 98, 99 onwards. And till 2009, I used to trade. I mean, in between, I blew up my account a few times. So went and did some jobs. 2006, I became a sub-broker. And broking was mainly because of NSE Now. NSE Now was NSE's technological platform that they were offering to any new broker who wanted to start offering broking. So before NSE Now, you had to invest in technology. But post NSE Now, you could, anyone, just paying a membership on the exchange could potentially become a broker. And you had a back office. Back office is a platform that you used to process contract notes, etc. And that vendor, I was the first customer. So he said, you beta test for me, I'll give it to you for free. So in a sense, the entire business was probably started with, I don't know, 10 lakh rupees, 5 to 10 lakh rupees. So, it was never meant to be this, So, I go back and I look at the first business plan that I made. I think the best case outcome was 100,000 customers, as in 100,000 customers forever. As in we had thought that 100,000 customers is it. We never thought we could go any beyond that.
Do you have that business plan framed?
No, but the business plan is so badly written. So
have you kept it?
Yeah, I have it in my email box. But that was it. No disruption and all. And how Bangalore boy? I mean,
yeah. How come you were trading? I mean, is it something which you saw a lot of people in your family doing? Do you come from that kind of a background which was interested in capital markets?
No, I mean, I was. I've said this a bunch of times, but I was living around Marwadi friends, and they got me introduced to markets early, and I started trading 17, 18, and Nikhil is like 6-7 years younger than me, and he also started trading at 17, 18. I dropped out of college. He dropped out of school. So we come from a family where education is, if you're not done engineering from a A-grade college, people look down upon you. So no, nothing. I mean, I was probably the first businessman in the extended family. I got asked to go get a real job till 2012-13. So for almost 14-15 years of my life, there were people who were telling me to go get a real job.
There's always that one uncle, na? Who is like...
No, but not one, I had many.
What was the concept behind that flat brokerage fee? And, I was just reading an old quote of yours where you say that the old guard, the brokers actually called up and said, what are you doing? Tell us about that.
Yeah. So the concept was, in a online world, the cost of executing a trade doesn't go up with the size of the trade, right? Like if you buy for 100 rupees, 100 shares for 100 rupees, or you buy for 1,000 shares, it doesn't mean the broker is putting any extra effort, right? So the idea was, why should we charge differently? We should probably charge the same. We started with 20 rupees for equity delivery and futures and options, but soon equity delivery became free. I think in 2015 we went free brokerage for equity delivery, and it's the same pricing is remained till date.
Yeah, but then also, so one is to have a different idea, and then one is to have an idea that everyone can't replicate. The moat is not very high. I mean, others have now started doing this. It's changed the dynamics. How do you still remain differentiated? I'm just wondering if today, after all of this success and your FY24 numbers, close to 10,000 crores, over 1 crore of users, I think 80 lakh plus active users, the dimensions have changed completely. How do you continue to stay on top? And do you worry a lot about it at all?
I mean, I feel the whole COVID was really, the period of time post-COVID was really like a outlier. So I think the pace of growth that we saw in the first 2-3 years of COVID, post-COVID, I don't think that's really sustainable. And I don't think, I mean, I think last year was probably the peak of the broking industry, right? So if you were to ask me, I would say that, because if the broking industry doesn't figure out ways in which it can generate revenue, and it can't be just based on futures and options, it has to be something new. It can't. Then I think the last year would have been the peak revenue. I mean, last year in the sense until October would have been the peak revenue brokers would have made in the next 2-3 years. I don't know. So what differentiates us today? If you were to ask me, the fact that the platform has been existing for 10 years is itself a moat, right? As in the fact that it's seen all market cycles, and so it's spent a lot of time, and it's just not Kite. It's Console, our reporting platform, Coin, the direct mutual fund platform, all the startup ecosystem, that we have invested in, that have come played around. And the brand also, right? A brand is like Zerodha. I still remember the first 3 years, people would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us. As in, the fact is, that 1 crore customers together add up to 5 lakh crores in AUM. Right, that's what the differentiating factor. So, can someone catch up in terms of product, in terms of potentially yes. But I know I got a vested interest in saying this, but I think our product is way ahead of its competition.
Who is your competition right now?
I mean, everyone, as in Grow, Upstocks, Sharekhan, Angel, ICSI, everyone. I mean, everyone's looking at a profit pool and going after it, I'm sure. And but what actually differentiates from the rest of the crowd is the philosophy with which you run the business. That is something I don't think is easily copyable, because and that philosophy comes because of saying customer first, right? As in, I mean, every broker, every competitor of ours would be saying he's doing customer first,
yeah.
But we are actually customer first, and like for example, let me when you get onto a trading platform, any app that you download, the platform will find ways to nudge you to take a trade. They'll say, these are the 5 top stocks of the day. These 5 stocks are getting bought the maximum. So it creates a sense of
urgency,
something like that, for you to take a trade. Or they might say, these stocks have hit the 52-week low. Again, triggering you the urgency. I mean, of course, them sending out stock tips, which I don't think is the right thing for a broker to send out the stock tips, because how can one tip be, same tip won't work for everyone, So we do none of that, right? As in, and it's very easy for the business to say, let's compromise on some of this, in some of these ideals, and we could maybe start, engaging our customers this way, and we're not. As in, I remember, NSE sends out this active customer list, where they mention brokers by the total number of active customers, and we are probably number 2 on that list, and we'll probably be number 3 in the list very soon. And that's because of that, that's because we don't engage with the customers.
Doesn't bother you? Do you look at that list? Do you want to be number 1?
No, I mean, of course, who would not want to be number 1, so. But at the cost of what, right? And that's the philosophy which I spoke about, growth at the cost of what? Number 1 at the cost of what? And are you okay with the cost? And we are not okay with the cost. And so yeah, it doesn't bother us that we are number 2 or number 3 on that list.
I think what's also interesting is that you talk very clearly about the impact of some things that regulators are doing. And you've been very vocal about the impact of what kicked in from November 20th, tightening of F&O regulations. I'm just wondering, have you started seeing impact on volumes, less trades coming in? Do you think first of all, do you think it was a good idea, required, necessary?
No, I think, I feel, that weekly options was a really bad idea.
To start it in the first place?
This was 2020, something around 2020, 2019 is when weekly options were given approvals for. And I think giving approvals for such a option contract itself is kind of was a bad idea.
But I bet it made you a lot of money.
Yeah, I mean, it did, but it's like money also, in a sense, you look at a 10-year time horizon and you say, do you make money in that much period? And you don't want to suddenly make money and then your business, factors in, for this condition to make money, and then suddenly you don't have it, like what we are in right now. So volumes have definitely dipped. It's already down 30%, and January 1st is when the contract size is also increasing. When contract size increases, then people who trade futures will move to trade options, and people who short options move to buying options. And the biggest problem in the market is buying options, right? The odds of you surviving buying options as a trader is really, really low. And the flip side of this regulation is that we are kind of maybe moving people who trade futures to trade short options to move to buying options. And even the STT increase, right? STT increase was supposed to hurt option volumes, but it actually hurt futures volumes because STT is on futures turnover, So all of this is really bad for the industry.
So bad for the industry, but you're saying good for the investor, because you started off by saying that having these weekly expiries was a bad idea in the first place.
Yeah, and it absolutely was. Mm-hmm. And then once you put that weekly options expiry, and then you had both the exchanges competing with each other, and Monday something, Tuesday something. It was bound to happen. It was bound to happen that they would push it to its brink of failure. So
now let me make the flip side of the argument. When the Indian capital market is now maturing, should regulators be treating investors like children who need to be protected? Is it a bit of nannying that we don't need?
Yeah, in a way, I feel that maybe regulations are kind of pushing boundaries in some places, so.
Is it the biggest threat to your business right now and to the industry, of course, but from your perspective, regulation and the uncertainty about what's coming next?
Yeah, it is. I mean, fortunately, all the regulation that could have hurt the Indian business, has already played out. So
You hope. Fingers crossed.
no, but there's nothing much regulations can do. As in, the only thing is, of course, as in, they might say F&O trading only for, accredited investors, or something like that. So, that would mean a death knell for the industry, for futures and options as a whole. But apart from that, this is nothing much. Nothing much. The regulations can, change in the future as such. So.
What next for Zerodha? I mean, you of course, a large player, very, very crucial player in the broking space. But then you've now ventured into mutual funds. There is some amount of credit that you're giving as well against, stocks and equity holdings. What next? What's the vision? What's the vision, or are you happy with where things are going and taking it? I'm just wondering, are you one of those very driven, passionate, on the job, on the clock, 24/7 kind of founders, or,
No, I mean, see, the thing is, people mistake that you have to be, outwardly aggressive to be aggressive. We are completely aggressive, but I can be aggressive just like talking to you sweetly, So, no, we are of course looking at growing. I think, like I said, I think broking industry has peaked, as in terms of revenue. For the next 1 to 3 years, I don't see how, the volumes, etc., is going to come back. In terms of all these investments that we have done into the AMC, into insurance, into the NBFC, etc. So these are all like a 2 to 3 year old investments. I mean, so they have to, spend some time for it to start materially contributing to the revenue. And that's the eventual goal. Eventually, the goal is to diversify the risk that currently the business has. That is, so much risk is on the broking, and how much is generated of broking as a revenue, and hopefully, someday, we will have. We'll be, I'll not be asked questions mostly on broking. You'll be asking me questions on other things.
If I may. Nitin, I want to talk a bit about what this year has been like for you. And I know you've spoken about this openly. Again, something which I found very, very cool. When people go through a huge health event, they tend to shut down. They don't want the world to know.
Yeah.
You came out and you're very vocal about what you went through in early 2024. You had a stroke. Do you want to share why you felt the need to talk about it, what that journey was like for you?
No, it's just in the spirit of the earlier thing what I said, in the spirit of just being open and just being honest about everything is that, it's just, how can I hide if I had a brain stroke and it was not possible. Even now I'm struggling, so talking to you, I'm coming up with words, as in I can find myself a lot slower, and it's improving at time, but it's been only 9-10 months since the stroke happened, and
Was that your biggest challenge that you've ever faced?
By far. It's because the first 2 months of when it happened, it was basically my whole right side of the body had given up, and the first 2 months I couldn't move as in I could move but slowly and etc. But I couldn't talk at all. So yeah, it was. I mean, I was not knowing what was going on, but yeah, definitely by far the biggest struggle of my life. So.
No, I think also just the fact that you came out and spoke about it, started a conversation around these very important issues, and maybe it's helped someone to avoid something like that happening to them.
Yeah, that's essentially. I mean, even with Seema, she had breast cancer, and she wrote a whole blog about her having what all she did and etc. And so many people reached out and then saying that blog somehow helped someone out. So yeah, so when you're honest and etc., it potentially can help.
Yeah. No. So what keeps you going through all of the dizzying heights of success? I mean, have you? I wonder, someone with so much, do you look at your bank balance? Do you at any point say, oh, first of the month my salary has come? That stopped happening long back.
No, I mean, I think personally, money for, both me, Nikhil or Seema or, some of the guys who are, Kailash and Venu and etc., some of the core team, I mean, I don't think money has really changed our lives. As in, I mean, this office, we've been here from 2017. I mean, we are at the same office from 2015 onwards, where I sit, and I stay in JP Nagar, and far away from Bombay or Delhi or something, to get influenced by people who make more money than you. As in, the problem is, if you are around a lot of people who are constantly talking money, it can influence you to think about only money, right? As in, I don't think it is really changed our lives as such. I mean, in 2018-19. We took out a bunch of money and we said this is enough for our lifestyle, and that brought a lot of freedom, right? As in freedom not just in the sense you're free. I mean, more in the sense of freedom to take the risk. That's when 2019 onwards is when we have backed 150 odd startups.
So no, just on that bit. So you took out this one corpus. And you said, this is what I need to put away, forget about, so I don't have to worry about money every day. Would you want to share that number?
No, I mean, I would not.
Yeah. So what is your biggest discretionary spend?
No, I don't like to spend on things because I don't enjoy spending on things. But I don't mind spending on experiences. So if I'm traveling, for example, I would pay a bomb to eat in some of the best places. I would pay a bomb to go experience things that most other people would not get to experience. So, but spending money in a sense, it's on things. It's doesn't excite me.
Just a couple of last questions, because I know it's gone on longer than we thought. But what do you make right now of the whole conversation around where the startup ecosystem is going? And the biggest rage right now is 10-minute delivery, etc. And everyone has a view on it. Do you use these services? Do you think it's a good idea?
I mean, I don't use the services. I mean, I don't remember the last time I used any service, but I think it's a good idea. Yeah, in a way, in India, they seem to have found something because quick commerce has not really worked anywhere in the world, but in India, it's given how crowded our cities are, it's probably they've probably got something going for this, and overall startup ecosystem. I think we are in the middle of correcting from the excesses of 21, 22, as in, because a lot of startups raise a lot of money at those valuations, and they have to take a haircut now and to further raise. And so I think the startups that are finding a way to stretch until the valuation is in sync with the old valuation.
Or they have to list.
Or they have to list, But listing also is, is not. I mean, listing would, you probably have 10, 15 startups who have listed in India. I don't think listing is it, but yeah.
Yeah. And of course, you've been asked this question a dozen times, but it's one of those must-ask ones. So I must ask you that: is 2025 the year that you think about listing, or you have no need?
No need. And
is it because you don't want to be answerable to shareholders and to regulators even more than you already are?
It's got to do more with the philosophy of the business, and which I told you earlier, the first question you asked, and what differentiates Zerodha from someone else, and that's a philosophy. And once you have shareholders, you're kind of forced to grow quarter on quarter, and forced growth means comes across by compromising a bunch of things, right? And I don't know if you're ready for that yet. And secondly, the thing is, what do we do with the money? As in, we need to be very honest, as in, you raise money to do something, right? As in, what do we do with it? Because we don't know anything that we can do with money right now. So that's also the reason. Thirdly, as in, people say take some liquidity off and all. As in, our team has got, we open ESOP buyback every year, so they have all the options to exit.
Thank you so much, Nitin, for your time. It's been an absolute pleasure speaking with you. Thank you so much for joining us.
Thanks.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Hello and welcome to this Friday edition of the World Report with me, Arjun Samar Mahendran. Let's take a look at what's making headlines around the world. Wildfires are raging across Los Angeles, turning the skies red, destroying homes and businesses and blanketing the region with smoke and debris. The largest fire has grown to nearly 3,000 acres and forced tens of thousands of people to evacuate. LA is continuing to be menaced by wildfires, with the latest blaze, the Sunset Fire, bringing havoc to the Hollywood Hills, where the iconic Hollywood sign sits. Now, sustained powerful winds reaching nearly 100 miles per hour are driving fast-moving wildfires near Los Angeles, spewing smoke, destroying homes and closing roads. My colleague Vishnu Shom gets you this exclusive report from Ground Zero.
This is one of the worst hit areas in the greater Los Angeles area. You can see fire trucks behind me, and they're actually trying to put out fires in this particular home. This entire area has been entirely burnt out. You can see the fire service people walking in over here, the firefighters working over here. We can't get in beyond this particular point, but they're working over here. You can see a great deal of damage in this particular area. The smoke is still coming out of some of the areas over here, and what we're going to actually do is walk through some of these areas to give you a sense of what it looks like. And everywhere that you see, there's devastation. So just follow me as we, Stephen, go to this area and just point out that there's still smoke coming up from these homes which were completely destroyed, as you can see over here. And there are any number of homes which have been entirely destroyed. So there is smoke, which you can see coming out of these structures, a lot of stuff burning, we can smell it. There is ash in the air as well. If we move across this road, and this seems to be an affluent part of this area. We can see cars which have been entirely burnt out, and home after home has been completely destroyed. These are the savings of people completely destroyed, decimated, and this house behind me destroyed as well. Now, I'm just going to update our viewers on what the overall situation is. The situation remains tense because even though right now it seems that the wind speeds have come down, they aren't entirely certain that the winds have gone away. And until the winds go away, there is a huge problem over here because it's the winds which are spreading the fires. There are at least 4 to 5 major fires in the greater Los Angeles area, and all of these are uncontained. And it's these embers which reach out far, which trigger fires in areas which are incredibly dry. There is usually rainfall which happens. There is rainfall which happens this time of the year. That's not happened. There are wildfires which take place across this region, but that happens in the month of October by and large. What's taking place now is entirely unexpected. Billions have been lost across the region. The sense is that when this all gets figured out, you're looking at the most expensive natural disaster in the history of the United States of America.
Outgoing Canadian Prime Minister Justin Trudeau's Liberal Party has said it will choose a new leader on the 9th of March ahead of the 2025 elections, for which polls show the party is indeed in a very weak position. Now, the Prime Minister announced on Monday that he will step down in the coming months after 9 years in power, bowing to the pressure from lawmakers alarmed by the party's miserable showing in pre-election polls. Trudeau said that he would stay on both as Prime Minister and Liberal Party leader until the party chooses a new chief. Meanwhile, Chandra Arya, the Indian-born Member of Parliament in Canada, has announced his intention to run for the post of Prime Minister and the leader of the Liberal Party, following Trudeau's resignation as Prime Minister earlier this week. Now, Mr. Arya, who hails from a village in India's Karnataka, emigrated to Canada about 2 decades ago with his wife and son. He was first elected to the Canadian House of Commons in 2015 as part of the Liberal wave led by Trudeau himself. Now, the Liberal Party had then won the majority number of seats. Elon Musk took his endorsement of Germany's far-right party to the next level on Thursday, hosting a live chat with its front woman, Alice Weidel. The 74-minute conversation ranged around energy policy, German bureaucracy, Adolf Hitler, Mars, and the meaning of life. The world's richest man unequivocally urged Germans to back Alternative für Deutschland, or the AfD, in the forthcoming elections. It's the tech billionaire's latest controversial foray into European politics. Venezuelan opposition leader Maria Correa Machado was seen exiting an anti-government protest in Caracas on Thursday before her term reported her arrest by security forces. Moments later, there were official denials of her arrest in a confusing episode that capped a day of protest seeking to block President Nicolas Maduro from clinging to power. It remained unclear what exactly happened after Machado bid farewell to hundreds of supporters, hopped on a motorcycle and raced with a security convoy down a main Caracas avenue. At 3:21 p.m. local time, Machado's press team said in a social media post that security forces have quote-unquote violently intercepted her convoy. The United States has no current plans to increase its military presence in Greenland, the US Embassy in Copenhagen said on Thursday, following renewed interest by incoming President Donald Trump in acquiring the Arctic island. Trump, who takes office on the 20th of January, said this week that Washington control of the strategically important Arctic island was an absolute necessity and did not rule out using military or economic action such as tariffs against Denmark to make it happen. Meanwhile, Greenland's Prime Minister has called for unity, urging citizens not to panic after Trump's repeated calls for the island nation to be included into the US territory. Mute Iga said he understood many people may be concerned after the incoming US president declined to rule out using military and economic force to gain control of Greenland, but called on his fellow citizens to put aside differences and stand together. His government released a statement on Wednesday evening reiterating Greenland's right to self-determination, adding that it looks forward to establishing contact with the Trump administration. The US Supreme Court has narrowly denied Donald Trump's request to delay his criminal hush money sentencing, clearing the way for the president-elect to be sentenced Friday morning in New York. 4 of the 9 justices indicated they would have granted Trump's request to halt his sentencing. However, Chief Justice John Roberts and Trump appointee Justice Amy Coney Barrett joined the court's 3 liberal justices, in fact, to deny Trump the relief he sought. On the other hand, a federal appeals court has cleared the way for the public release of special counsel Jack Smith's report on the 2020 election interference case against Trump over objections of the president-elect. US President-elect Donald Trump has said a meeting was being set up between him and Russian President Vladimir Putin, but the Republican offered no timeline for talks between the two leaders. Trump offered no timeline for a meeting. Trump's return to the White House on the 20th of January has sparked hope of a diplomatic resolution to end Moscow's invasion of Ukraine that began in Feb 2022. But it has also led fears in Kiev that a quick peace could rather come at a high price for Ukraine. Lebanon's parliament voted to elect General Joseph Aoun, commander of the Lebanese armed forces, as the country's new president, ending a years-long leadership vacuum that hobbled the government, delayed key reforms, and raised fears of a wider collapse as the nation faced numerous crises. Several weather monitoring agencies have announced that the Earth recorded its hottest ever temperature in 2024, with such a big jump that the planet temporarily passed a major symbolic climate threshold.
Last year's global average temperature easily passed 2023's record heat and kept pushing even higher. It surpassed the long-term warming limit of 1.5 degrees Celsius or 2.7 degrees Fahrenheit since the late 1800s and was called by the 2015 Paris Climate Pact, according to the European Commission's Copernicus Climate Service, the United Kingdom's Meteorology Office, and Japan's Weather Agency.
Global Climate Highlights 2024 released today show that at global level last year was the hottest year on record going back to 1850, with global average temperature anomalies 1.6 degrees above pre-industrial level, exceeding the emblematic 1.5 degree goal of the Paris Agreement.
An international team of scientists announced Thursday that they've successfully drilled one of the oldest ice cores yet, penetrating nearly 2.8 kilometers to Arctic bedrock to reach ice they say is at least 1.2 million years old. Analysis of the ancient ice is expected to show how Earth's atmosphere and climate have evolved. That should provide insight into how the ice age cycles have changed and may even help in understanding how atmospheric carbon has changed climate.
Looking at the climate record stored in the Epica core, we know that also in the warmest period of our climate history, the Earth, the greenhouse concentration, so CO2 and methane, was never above the concentration that we are observing over the last 150 years.
Google and Microsoft have donated $1 million each to Donald Trump's inauguration fund, following in the footsteps of other major companies including Amazon, Meta, OpenAI, and even Uber. A slew of other major companies made hefty donations to Trump's inauguration fund in the last month. Now, the fund will cover functions and activities connected with this ceremony. Amazon, Meta, and OpenAI CEO Sam Altman have all made donations of $1 million, as well as Toyota and Uber. The contributions, which have helped Trump's inaugural committee raises a record $170 million in donations, appear to be an attempt by tech giants to curry good favor with Trump ahead of his second term. By comparison, Joe Biden's inaugural ceremony raised only $63 million back in 2021, while Barack Obama's inaugurations raised $53 million in 2009 and $42 million in 2013. Global banks will cut as many as 200,000 jobs in the next 3 to 5 years as artificial intelligence encroaches on tasks currently carried out by human workers. Now, this is according to Bloomberg Intelligence. Chief Information and Technology officers surveyed for BI indicated that on average, they expect a net 3% of their workforce to be culled, according to a report published Thursday. Now, back office, middle office, and operations are likely to be most at risk. This is according to a senior analyst who wrote the report. Customer services could see changes as bots manage client functions now, while know your customer duties would also be vulnerable. Any jobs involving routine, repetitive tasks are at risk, he said. But AI will not eliminate them fully, rather it will lead to workforce transformation. Oil prices rose in early Asian trade and were back on track for a third straight week of gains, with icy conditions in parts of the United States and Europe driving up fuel demand for heating. Now, Brent crude futures climbed 40 cents or 0.5% to $77.32 a barrel at 6:06:02 GMT. Meanwhile, US West Texas Intermediate crude futures gained 38 cents, also 0.5%, to reach $74.30. Over the 3 weeks ending the 10th of January, Brent has advanced 6%, while the WTI has jumped 7%. Canadian Prime Minister Justin Trudeau criticized President-elect Donald Trump's proposed U.S. tariffs on Canadian products in a meeting with American business leaders on Thursday. Now, Trudeau said the step would have negative impacts on both countries. Trump says he will impose 25% tariffs on all Canadian imports unless Ottawa boosts border security. On Tuesday, the president-elect floated the idea of turning Canada, in fact, into a US state. Paris Olympic champion Anse Young cruised into semi-finals on Friday in Malaysia Open at Kuala Lumpur. Malaysia, the world number one, in fact, and defending champion, used 16 minutes to book a spot in the top four after her opponent in the quarterfinal, Beiwen Zhang of the USA, retired for leg injury after the top seed clinched the first game of the match. An will face Thailand star Ratchnok Intanon in the semi-finals. Gail Monfils became the second oldest player in more than 30 years to reach the final of the ATP Tour event after beating American Nishesh Basavareddy 7-6, 6-4 in the semi-finals at Auckland on Friday. Now, Monfils is 38 years old, 38 years and 131-day-old, in fact. Ivo Karlovic is the oldest to make a final, having finished runner-up in Pune, India in 2019 at the age of 39 years and 311 days. And at the 18th Pravasi Bharatiya Divas, women amongst India's growing diaspora are at the forefront of creating community service partnerships between India and the world. From social work to building women-led companies to sensitizing their country about India, diaspora women are playing a pivotal role in creating greater connect between India and the world. NDTV World's Gauri Dwivedi spoke to a power-packed panel of diaspora speakers, or India's diaspora divas. Listen in.
What this means to you, the importance of women and the importance of having a diaspora dialogue focusing on women.
I think India today really is moving towards empowering women in all aspects, and having provided us with such a respectable and such an honorable position and a place to speak on such an important topic is really very important. Thank you so much. Yes.
Shalette, you are from Jamaica. Talk to us about the connect as far as Jamaica, India is concerned, and also the fact that women-led businesses, women-led organizations, how much they are building the bridges between India and Jamaica.
I think it's amazing that we get this opportunity to talk about what women are doing, and Jamaica and India has a 180-year history, and over the past few years that's only been getting better, and Jamaican-owned businesses by Indian diaspora are also growing, and I think it's a tremendous opportunity for us to use our position as women to ensure that we get our part of that ever-growing pie.
Dr. Indrani, you are pretty much representing Trinidad and Tobago here. Talk to us about women empowerment, because that's an area that you work very closely on. And what's been your experience like in terms of getting Indian women and building that connect with Trinidad and Tobago?
Well, you mean both from India and Trinidad?
Yes.
Yes, well, it's been a challenge because we don't network as neatly as the men do. But we are certainly growing that now with our women here. And I'm so glad for the opportunity to mix the different diasporas. Usually we exist in silos, but it's wonderful to come together as women.
Yes. Sakala, there's an area that you work very closely on, which is textiles, and I think that's one sector where women dominate. They dominate in terms of employment, unfortunately not in terms of returns. Tell us what it's been like so far.
So one of the things that, hi, thank you for having me. One of the things that I've found over the years is there's not been enough focus on India-led businesses, whether it is men or women. Fashion is one of the biggest businesses in the world, $40 billion worldwide, and India has a significant chunk of it for luxury. So I'm trying to focus on sustainability and luxury fashion of India with the diaspora all over the world, getting to know a little more about the Indian brands and proudly encouraging it.
Ms. Sagar, you are I know you're from Indonesia. What I was coming to was you are really taking the Indonesia-India Business Connect forward. Talk to us about women-led entrepreneurs, women-led companies and women entrepreneurs in your experience.
Yes, I thank you. And it is very important for women to support each other. And I think we are all change makers. And the more together we are stronger. So in the Business Connect, it is women who take other women forward. And I think in Indonesia, women are very empowered. And I think this is something that we all need to learn from each other. How to be stronger together, how to support each other and take each other forward.
I want to ask from you, ma'am, how important, come forward, ma'am, how important has this diaspora dialogue been for women and from women's point of view?
I think it's very important because it's not putting a very important topic on the agenda. It's also a crucial part of Viksit Bharat. And if we succeed to empower women and help them and support them to reach in leading positions, women together with men can make history. India can be a role model for all the entire world. So I'm really proud of the Indian government who is putting this on agenda.
All right, Sudha, you're coming from Tanzania. Tanzania has a very large, vibrant, prosperous Indian community there. Talk to us about your experience, areas that you're focusing on, and how much do you think movements like Pravasi Bharati really build on those connects?
This is indeed a great platform for us. And as a mental professional, I always vouch for the mental health of the women around the world. And my one Shakti, what I think, or my one voice is that we women, we need to have a choice to choose whatever we want to do. That is the freedom.
And ma'am, let me ask from you in terms of specifically Eastern Europe, Slovenia and several other regions. How do you see the diaspora connect there? How do you see the kind of programs that are being led there? And I want to ask you specifically when it comes to Nari Shakti, how is it that's being bolstered?
I live in Slovenia since last 50 years and Nari Shakti is very, very strong in Slovenia. All the Slovenian women, they work. They don't want to stay home and be commanded by their husbands. No way. They don't take any commands. They are all working in the home. They work in the house. They take care of their babies and keep full-time job in their offices.
Well, that's all we have for you today. Take care and have a wonderful weekend. Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your